Okay. Let's look at S&P. Well, we're pressing, pretty good to the upside, as you can see. Um, I have two wave counts. Um, this last correction that we had, which was this 4.5, whatever, 4% drawdown from here in this wave two. We can count this as a 1, 2, 3, 4, and this is 5. Okay. So that completes one minor degree. Okay. Because this one is intermediate degree. So now you need to complete 5 smaller waves within 3 to is to complete the third wave. So it's a long way to the upside. I'm not projecting anything that far. But for now, you can see it is in a well-defined, clear channel to the upside. Okay. Take this low, connect it from this low, because this is your biggest correction that we had, right? Which was this 9.70%, almost 10%. So we have a 10% correction here. We have a little over 4% correction here. That's all we had. Okay. So you take this low, connect from this low, then project the top. So whatever the upside that you have here is where your third wave will travel. Okay. But that's a long way to go. But in the same time, what we can expect from here is, can we call this a completed 5 waves of one? Yes. Um, it is a clear 5-way move. Now it has to, if this, there's a lot of fibs here. Okay, you have a 6 1.8, 100%, which is this 5 versus 1, 6 1.8, and 127 extension as well. The 127 extension is from here. Remember, I talked about, show you this way. You take this high to this right there. You see, you have 78.6, 100%, which was this high right there, and now we're right at that 127 extension. So this zone right there it has a lot of resistance. Okay, get rid of all this. We need this. So the point is, like, okay, so the market is making higher highs, right? We get that. We know that. And market is literally ignoring. CPI came up a little bit higher, didn't really care. PPI was like, like this, all the data just coming out. Market just literally doesn't even care anymore. It just keep on going. But looking at the volume yesterday on SPY, it's just starting to put a little bit of a doubt. It's just, you when price makes higher highs, like new highs, you want to see volume give you that strength to see if the volume make a big spike as well to the upside. Well, that's not the case. Volume is not there. To the for price to, you know, to push, to make new highs. Volume is very important. So Q's yesterday was an inside day. I mean, the only thing that, if you watch everything, as much as I look at things, especially the first hour, how we open and how everything is moving, it's it's about small caps, value, which is your Dow 30 stocks, and mega growth, which is all your Mag 7. So Higher rates help Mag 7 throughout the entire year. Everybody was betting on small caps that as soon as the Fed is going to cut rates and the small caps is just going to rip to the upside. But that wasn't the case. But yesterday, right after PPI and then IWM now is starting to move to the upside. But it was a bit of a shift yesterday. I kind of starting to realize like we had a rally. I know JP Morgan Chase reported earnings and stock got a big of a pop, it popped pretty good. So that drives Dow to the upside. And then the small cap going right next to it. And then Mag 7 is just wasn't really doing much. And here you have S&P keeps making higher highs, meaning new highs, and Qs are still almost down, like, or NDX is still down almost 3% from the highs. It's not making any new highs though. Yeah. That's what I wanted to show you. So if this is a completed five-wave move, this is the zone that I'm going to watch, okay, to see where we at 58.15. So 58.15, so we have what 58.14 right there. So these fibs is gonna give you a lot of these prints, right? So 48, so 58.14 is right there. Then we have 58.41, 58.45, 58.29. You see, this is what I wrote, is that it is a massive cluster of fib resistance here. That would put this as a completed five-way move. Now, at the same time, I don't have any sell signal, right? In order for me to take a big chunk of a position, thinking like, yeah, this is the top, and we're gonna come down, like, what we can do now is this is our support, which is 57.67, right? Right there. And our major support is this. Every time where you have the largest percentage decline, okay, which was this 10%, this is going to be the most important support. If the price starting to break lower, what do you think is going to happen? You're going to break this channel, correct? You're going to come to this support right there. And look how many times this price came back. Like it. So this was the high, right? Watch right there. This is what they call liquidity zone. How many times the price was trying to press toward the high, and it keeps on failing over and over again. You see all these attempts right there got so close. Seller comes in, keep pressing them lower and lower, because they're trying to defend this high right there to see if market breaks to the upside or if it rejects. This is your resistance. So this is where, after so many attempts for so many days, okay, for this is almost like what, almost 2 weeks. Now you have to understand one thing. This is a 1 hour chart, okay? A 1 hour chart, each session is 6.5 hours long, right? So for 6.5 hours, you only have 6 bars for the entire day. I mean, that's all you're gonna get. But the 1 hour chart is it is an ideal for swing trading, for for day trading, not really. You gotta go into a much smaller time frame. You gotta go into that 5 minutes or 15-minute kind of chart intraday. If you are doing swing trading, like trading spreads or buying calls like 2 months or 3 months out on time, 1 hour is the perfect time frame for you to trade. The wave count is easier to count waves on a 1 hour time frame instead of wasting your time on a 15-minute time frame or 5, 10. With those, that doesn't work at all. Those are just literally impossible. to make, to make those wave count work. Because 1 hour is going to give you a much better, price action, like the much better price, meaning that you can see all of these corrections, whatever comes, is on the chart, and it gives you a lot of time because we're right here in October. If you look at right here in the bottom, right? So we're in October 11. Look how far that you can go back, all the way back to July. I mean, you're talking almost like a one full quarter. Okay, that's a lot of time for one quarter. I don't know, like, our time frame is if I structured a trade based on 1 hour where I could find a potential support and see we could get the bounce from there, or then we can just run our projections and things like this. 1 hour is perfect. You know, it works. And going back to a much like, people want to see daily time frames and those weekly time frames. Those will run. Those you talking those like for years. You know, I mean, time frame is very important for trading. If you wanted to don't want to go with Elliott wave and think like, well, I just wanted to adopt something different that much faster that I can make money and things like this, well, then you gotta start paying attention more to 10, 15-minute time frames. Those are like intraday moves. 15 minutes is gonna have almost like 20, like 15, 20 candles or bars per day, so you have more noise, you have more price data on a 15-minute chart. So so the thing now is like, can we call this a completed five wave? Yes, but we will have to see how is this zone next week, okay, will hold. I have a good feeling that it will, okay? So if the price backs off from here, what will be our minimum downside that we would look for? It is 57.67, which is this high right there, okay? Why is that? Is this is where that was the high. That's where we had this wave four came, retraces down to this 3.6 and 100%, which is this 1.61% decline. And then from there, we poked above and then came back down. You see, like this bar right there, this hourly bar right there, we're trying to hold this support right there. Because every time when you break this is your resistance when you take out the high. But then when the price comes back down, that acts as a support. So broken resistance becomes a support. All you're doing for an uptrend, you keep looking for those higher highs. That's how the trend continues. And then on the when you have higher highs, and then on the way down, you're looking at the higher lows. You don't want to start making lower lows. That's when the trend will change. So, but for now is for next week. Um, this is a zone we will watch. If price will show some rejection, then that will be all based on cues. And if we could find any weakness in any one of those big Mag 7 to see if S&P can set back a little bit. So we will be looking at 57.67. So that is 58.15 down to, that is what, almost 58.15 minus 57.67. That's almost 48 points. And if price starting to break below 57.67, then we will start to see what kind of a retracement that we could find as a, against this five-way move. And if price accelerates, that will trying to break this channel right there. This channel breaks, this support will come into a play right there. Okay. This is where the price will accelerate to the downside. So then you can see where this wave two can come into a play. I can run the downside retracement. Let's assume for now that this price is here, because these to see all these fibs, they're gonna move. So I don't know where the high where the top is. So let's say this is the top. So the minimum downside for 23.6 is at 57.15. So then from here is 38. So this zone right there is going to be this is where we're going to have our wave two. We have this support, 23.6 along with 38.2. So I mean, this thing can slide hard. I mean, it doesn't matter because this is called a counter trend move that moves against the 5 wave that you have completed to the upside. So whatever ABC or WXY or whatever the case is, well, I don't know that. I cannot say anything about it yet. So the other thing we could do, what I have here is this. I have so this one. Now this wave count here. Now you see the difference. This one shows a completed 5 wave. We could make another high right there as well. It is possible. But if we just have to focus on this price for now. This. Okay. Don't worry about anything here because I don't think there's any catalyst out there that suggests this kind of a drawdown for now. We just focus on this from 56.69 up to this. That's a lot of points. Okay. To the downside. We just only focus on this one for next week. Okay. So this one shows a completed 5, which suggests that we have a wave 2 to come. This wave count here completes 1 here. Why is that? Is because instead of making this 2 as a 4 and 5, you can count this as in 1, 2, 3, 4, 5 as in 1. Here's in 2, down to this 2, 3.6, and this is 1. So regardless what the outcome is, if this is a 1, it is going to be due for 2. If this is a completed 5, it is due for a 2 as well. So both of these wave counts suggest there is going to be a wave 2 and it will come into a play. Okay, it could be a next week, it could be a following week. Okay, so this one right there, we have a same 57.67 here. Now our major support goes here. Now this one is I mean, this is pretty aggressive. Like this wave count is, I mean, it is looking pretty promising the way the market is going up. I mean, same drawdown, 1, 2, instead of making it 1, 2 here, so instead of what we have to look for is either we look for this smaller wave 2 or we look for this blue wave 2. So we're going to find out. In order to make this case, we need to have 2 lower bars on a daily time frame. Okay, which works here. Okay, come on. Here. We need 2. Right now we're in a 4th swing to the upside. This is number 4. So 1, 2, 3, 4. So we need 2 lower bars. I mean, if that comes into a play, and then we will look for this wave 2. But for now, I mean, because the uptrend is so strong, market can just literally go sideways, because if you end the week with an inside week, meaning that if it no high with a no new high and no new low for the week, I mean, that's you cannot say that the wave two is going to come into a play. You know, you need two lower bars. So I track 1 hour here on a 1 hour time frame on swings. I have those as well. So I line them up here. So I have 1 hour swings here as well. They're working. Okay. So right now, these swings, this is one, this is two, and this is the third swing. Okay. So for the fourth swing right now, it's showing me this downside print of 57.58. Okay. This is a third swing right there. This is the swing ranking we call it. So when the swing goes 3, 4, 5, whatever it is, so the ranking will keep going up and up. So this is the third swing right now. Now, the close that we had for yesterday was pretty strong. Okay. We closed yesterday right here. That's 58.14. And yesterday high was this week high was, which was made was yesterday, was 58.22. So we're very close. I mean, if we pushed or we just open up a little bit higher on Monday, we're gonna have another higher week. Okay, meaning another higher weekly bar. So every time when you're gonna take out this high, you're always gonna try to press more. It's because it's to make some more room to the upside. Um, it's the same thing with the downside when you have a lower weekly bar. Once you have lower weekly bar, it's very hard for price to make a full reversal back to the upside. You know, it makes it a little difficult to play the upside because you have to pick a direction. Is if you're bullish, you're looking for higher bars, meaning that price needs to make higher highs. Okay, that's your high swing. There's your swing to the downside. Here's your swing that goes up. It didn't take out this swing right there. See, came back down, made a higher low, didn't take out this low, and then what happens? Right there, you see this red changes to green as soon as it breaks above this high right there. See how color changes? So swing helps a lot for me to, to pick directions. I mean, it's going to be a little bit messy. Depends on the time frame. You see, like here, swing came down, went right back up, came back up. Like this is difficult to trade. Like this mess. You want you want more a directional move. This way you can make money fast, being long on any stock. Yeah, this kind of this is the same price action here, right there. Okay, that was this little choppy wave four. So the swing counts are different because they're Elliott is more advanced and more in detail compared to swings are just a simple 1, 2, 3, 4 counts. There's no labeling in between, and there's no fibs there either. Only you can just only use those generic, regular fibs. These are ones are just gives you more detail and gives you a lot of good entries, you know, to find a potential support and where you could where you have I mean, if I would just hand label this thing like, okay, here's the support right now, here's my major support, and here's my resistance. So I can just hand label this thing just like this. Okay. And then from here, I would expect like, okay, now if I wanted to go up, okay, what I should be looking for? You can just simply run your fibs from this support right there to this, and you can just look for these extensions to the upside. So you can do this way is to narrow to filter all the swings just to see what would be your upside would come. You have to look at this way. The trend that goes up, it is going to cool off at some point. Okay. There's no such a thing as just gonna go up forever. We all know that. I mean, there will be a rejection, there will be a correction. That correction is starting to get steep is when a lot of things will get changed. But everything looks so perfect every day when we just it's just the one easy market, I would say, to buy. Like, just throw money in and just wait a couple days and you're gonna get paid. You know, it just I mean, elections are what, 23, 24 days away. And yeah, election seasonality is definitely working pretty well for the market. But if you starting to look at, I mean, a lot of stocks are okay, but at the same time, they're not really making new highs. You know, I mean, if you have you have one index, the ETF here, I call because I'm so used to of the Russell. I mean, this is still sitting 10% from an all-time high. Okay. I mean, here you have a large cap, which is S&P is making printing new highs. NDX is not making new highs. And Dow is making new highs. It's just the market is just so divided. It's just that makes it very difficult to because over the years, as many years that I've been trading, and it makes it much easier when you have the broader market strength and then you have the same broader weakness across the board, you know but with these rotations and with all this, like making all these adjustments, like you had SMCI stock, which was how hard the stock was, went up to the upside. And what they did, they removed the stock out of top 10 holdings of IWM. MSTR was in there as well. I mean, these are the ones like that could help small caps, but not anymore. You know, they just kicked all these stocks um out of this index. They just literally right now flooded this entire index, which is Russell 2000, with just a company that just makes no money. All the garbage, okay, is in this sector now. Sorry, in this index now. All the garbage. Companies with negative EPS, they haven't made any money from the last 3, 4 years. Okay, look at their financials. Okay, 85% of the companies out of those 2000, this has 2000 stocks. Think about it for a second. S&P has what, 500, and Dow has 30, right? This one has 2000 stocks. From 2000 stocks, you take 80% of those. That just literally makes no money. I mean, if the 80% of the stocks that are not going to help, what makes you think that the small cap is just gonna rip to the upside? But cutting rates one time for these companies will take a bit of a breather. But those companies still has to report earnings, and we still have to see, like, okay, well, is their balance and the debt they're carrying, is there, are there are is that thing is going to help them or not? It's not like Fed comes in, cuts rate, you buy small caps next day, and that thing is going to be a massive rally to the upside. No, those rates, those companies has to move. But now the thing is this, you don't have any strong companies in this IWM anymore because they just pulled them out. They just left them with nothing. You know, have an IWM as in a portfolio is not a bad thing either, because small caps do have potential, and they will give you returns. And if you take an average 10% each year, yeah, IWM can pay you quite a bit over the years. You have to look at that way as well. You can't expect like an ETF to perform 30%. It doesn't work that way. If S&P right now is what, 21% year to date, ETFs average is close to 10% every year. You'd always talk about 10% is a standard return on your investment. Okay. There's so many brokerage firms out there who manages people's money on a daily basis. Like JP Morgan has their private clientele, and Northern Trust. Like there's so many banks and so many like those firms out there that they manage people's money. What return do you think they are paying to those old folks that who cannot sit and manage their own money, and 10%, 12%, 13%? That's about it. Which firm out there that that they're paying 18, 19% return to these people? Name me one, because I'm curious to know. You know, so if you have professional firms, guys who have so much experience in this market are paying. So if you have $100,000, 10% return is 10 grand. So you hand them the check, they have the money, and you can expect, if the market performs, okay, they're willing to pay you 10% return. That's their average return. So they're talking about their portfolios, and we will invest money here, we will invest money here, this and this and this. But in the end, you're just like, okay, so you can invest money in 5 different sectors, but that doesn't mean those 5 different sectors will outperform the S&P 500. One or two will lag as well. So that's where you have to make those adjustments. Running portfolios are very different than from your day-to-day trading. Ask me, I do it every day. It's a headache. Okay. I manage money for people. Um, it's not an easy, it takes a lot of my time, and it's you just gotta have to I'm always like watching RRG, the relative rotation graphs and things like this. Is just, there's some positions I have to reduce some of the risks, hedge with some options, and there's so much goes on with those. And it's just, it looks easy when you look at things. When you sit and manage, it's a whole different game, you know, because if price moves here, and then he was like, should I buy now? Oh, well, you were sleeping that time when the price was here. Like, if you have an interest of buying something, if you have weakness coming into a play, should consider buy something. You don't have to open like a massive size position. Like the price is declining, right? But if if I'm showing you a chart, like, okay, if we would have this as a 1 2 1 2, so we have a high here, higher low, higher high, higher low. As long as we can just hold this low here, I mean, these are all these are all buying. This is the pullback here for you to consider entries. Now, if the price came here, went back, got the pop, reject back here, does that mean you just get out of the position? Whoa, what went wrong? But then your emotion kicks in so hard in your head. It's like, oh my God, I was up. I didn't take money. I didn't take money. And then all of a sudden I'm back to flat. Okay, but that's fine. But that doesn't change your outlook. Yeah, you're just gonna have to. swallow a couple sessions with being flat or slightly down. But the point is like you're you gotta have to have the plan to be in a trade. If the trade is looks okay, just stay in it. You don't have to make some rational, like emotional decisions like, oh no, I just need the quick pop that I can just cash it out and just close it and just jump to another trade. I mean, there are some trades there will, as soon as you enter, they will instantly start moving. Those are the best ones. And how often do you think those comes? Like as minute you open the trade and then there goes price, starting to get the pop. Some of them they takes time. Some of them they're just gonna torture you. But the ones that they will torture you, but if you have enough time, you should stick to your play. It's patience. You have to wait. If if you know the price, the channel is good, the wave count looks good, we are as long as the price is making higher highs and higher lows, stick to the plan. I mean, 2 months, that's a lot of time. 2 months market can sell off almost 15-20%. You know, anything can happen in 2 months. I mean, the way things moves on a daily basis, you know how it is one tweet out, whatever, boom, market. It is everything moves so fast. That doesn't mean it's like this thing will just rip 7.72% from here. That will like almost puts this IWM back to the flat line for the year to date. I mean, this thing is up like almost like 10, 11% right now. I think it started here, somewhere around here. So this, I mean, it is working. I mean, yeah, it's not moving what most people are expecting or kind of hoping for, that the thing just rips to the upside. But if you look at the let's see, where's my come on here. So it's up 10% right now, IWM, right? But look at all these years that has went up. Last year was 15. A year before was 21. Was down 20. Well, this was the bear market. Remember 2022? 13, 18, 23. So what does that tell you? This is 5 years of data that you're looking right there. 19, 20, 21, 20. 5 years is the minimum investment time for you to invest money in something on any stock or any ETF or whatever. 5 years is most of banks, and like when you go out and talk to any one of them, and they will invest your money based on a 5 time horizon, based on your age, because age is very important as well. 3 years average is flat, meaning for 3 years the sucker just has no return, just like Tesla. So compare IWM right now with Tesla. It's exactly the same thing. The 5 years pays you 8. So I understand that Tom Lee, I mean, I have a big respect for that guy who came out and said, like, we're going to have a 30% or 40% rally on small caps because of the Fed's going to cut rates. When did you see a 30% rally here? I mean, I understand he has more data or whatever things that he's looking at, but I don't have to go back 10, 15 years. Look, all I need is 5 years. I can look at the performance based on like, okay, what I could possibly can expect if I invest money in an ETF. Why just instead of hunting down these individual 2,000 stocks, I'll just buy the entire basket of apples instead of buying one apple from a store. Just say like, you know what? I'll just buy 2,000 apples all in once. Just own the entire ETF. Every single stock that is in the ETF, now you have it. So it's at 10. I mean, I mean, we'll still have time to go. It has potential. But do you expect this thing to go up another 20%? I mean, that's a tough call. I mean, it still has to get to 10% just to get to the new highs. And then from 10, that makes it what, 20? Just to break even, meaning to get to the new highs. And then from here, you expect another 10. So if we just use a ruler and I think like, okay, we're up 10 and we'll look for 20. Oh boy, gotta stretch this thing even more. Here, right at this 265. So you expect that in the next 2.5 months, okay, you're looking at, you can possibly think 265. I mean, let's see what goes 250. Yeah, 250. I can make a case of a 250 for now, as where the price stands at the moment. So you're looking for this third wave to come into a play. That's thing forward here. So we're looking at about 265, but 20% here, yeah, 250. Let's just be a little more reasonable, right above this new all-time high. So I'm long small caps. I mean, it's good. I think it is good to have small caps along with your trading, whatever, on daily basis, just um if we take 196 low to this swing projected from this low, our 100% is 230 right there. That is one. Okay. And then when we take this swing projected from this low that we had this week, our 100% is at 236. So these two, okay, can come into a play by the year end. It depends how fast this thing goes. But in order to get here, you need to clear this. Okay. So why is that? Because this was the high, the 224.94 is the high of this wave one. So you need to make a higher high to take out this high. Then from here, you need to take out this high. This is where you had this month, like big drawdown. That is 228. This is where this price is gonna come into a real test to see if it manages to clear this. Then you could have a run from, I mean, it's 230 is going to be really close as soon as you get to 228.63. So these two right there, okay, will give a push to the to this swing. This is this swing. You see? So you just measure two separate swings, get at least 100% relationship. Now, how long that thing is going to take, I don't have any problem. Because I don't have any options. All I have is shares from 186. I can just let that thing from here. Bottom all the way back here and like, I don't know. March this year or something. I mean, if I take my position as of close is 20. I mean, ETF is up 10. You know, it's a good entry. It's a very good entry. I mean, there's no point for me to even worried about IWM. I mean, if if IWM cracks from here down to 183, it's gonna be a bear market. That's the only way I can look at it from now. 20% drawdown on ETF is a 100% bear market for an S&P or NDX or or Dow 30. So it's a good entry. I'll just leave the way it is. That's why I'm not worried about IW. I do watch him, and I mean, we could try to trade this thing, but but I mean, got a pretty nice push yesterday, but we'll see. We still got a lot of work to do. Um, because from here, this is another 1.5, 3% move to 228. So this high right there, and then this 100% is 4, and this one is 6. So you're talking 14% and then 16% for IWM upside. Get to these two blue ones. Okay, 14 here and 16 here, just to remember that. So if you get to the 15 mark, you expect another 15. I mean, I'm not, no, I don't see it. I mean, I could be wrong. I mean, I'm gonna stay in a trade regardless, but I don't see that kind of a monster rip in a 2.5 months for IWM. You know, there's I just don't see it. Um, MSTR. Look at the volume here. Oh, look at these bars compared to the one yesterday. This is what you like. This is what you like to see. New highs, massive spike in the volume. This is a healthy price action, healthy, good looking chart. Okay. This is where the price confirms the volume. It's not the case yesterday with SPY. I'm a little bit cautious. Okay. So I've showed you these. It doesn't mean that I'm calling for a top here. Okay. But market is ready for some sort of a breather. So I'm not gonna make such a downside case like telling the whole world on my Twitter page, like, oh, we'll go down to 56 or we go down to 54. I know you cannot say things like this. I'll run retracement once I will have signs for that. But I have if I make I've showed you that thing on what was this SMCI, the chart that how how it went, and then from there it made a turn down, to the downside. So when I mean, I would love to buy puts, don't get me wrong, and I wanted to put some hedges on, because at this, I'm kind of like staying like all long, like buying everything and on the option side, and then at the same time, and then you have anything on your portfolio is everything is long. Yeah, I mean, any kind of a rug pull is gonna hurt, I mean, it's gonna shake things out. But at the same time, I mean, buying hedges is you gotta have to see like if you can find a case like any kind of a weakness in the market to make that case. And I don't see it. You know, it just, if like fibs, yes, I can make a cluster of fibs here. I mean, if the price accelerate, I can open a little bit more upside. But the point is like, if this wave two come into a play, let's suppose, but that doesn't mean like, okay, if this thing comes down to 23.6% or 38.2%, let's say even a 50% from this low, right? That means basically like cuts the rally in half at that 50. That doesn't mean that the trend has changed. You know, I understand that gonna break the channel. The price will be under pressure for a couple days. It could be another week or two. But the point is like the market is clearly okay making higher highs and higher lows. You need to change this trend. Price has to come back down to take out this 4% drawdown first to make a new low. Then from here, the price has to make a lower high. Doesn't has to go above this. Then from here, you look for this lower low. This is where you're going to have your major trend change. You need to take out one of your the largest correction low. That's where the trend starting to change. Trend don't change on a 1 and a 2.5% or 3% drawdowns. Like whatever the low is, if you take out this low right there, it doesn't mean the trend will change. You need to take out a low of your, these are the two larger corrections that you have. And so can you see that happening in the next 2.5 months? You know? Yeah, I mean, the only way I could see that is it's if election can give you this. It's the only way you can think of right now. Elections are very close. So as soon as we're going to end these earnings, okay, and we're just gonna have that election. This is why they're keeping this WIX at 20. And if you notice, it's not moving much. It goes up to 21, stays right back to 20. And it was at 10 for a very long time. As a matter of fact, I do want to check one thing and see how wide is the spread is between VIX is what is the God, I got this IQ feed. They have some of these tickers are changed. Oh, it's gonna volatility VIX. Come on. What is the it's an ES? So all of these ones are they use these. Some of them use dollar signs. Some of them use this VX. I have August, June, May, June, July, August. Yeah, this is fine. Right there. We do it in a volume scale. Here we have 21 VIX, right? And that was the spike that we had up to that 36. So let's do this. Okay, so the VIX high and low for this year Now keep in mind that VIX don't have any kind of a trend. There's nothing you can label. Okay, there's no such thing like this in VIX. So the low is 12.10 and the high was 37.10. Um, this is where we had whatever this Japan carry trade or whatever came into play. And here's the previous year. Now it can gives you a pretty good idea for you to kind of see how much volatility moves on an average per year. Look, there's nothing you can, there's no fibs and stuff that you can run all your cute fibs and think like, yeah, here's your support. No, this is a totally different ball game. Okay. Um, if you just take an average, let's say this year was 101%, right? So you have 101% back in 2022, and then you have 137% here, and you have 200% here. It's like your last three, I mean, this is the current year that we're in right now. But if you see like if you start going back year by year, it tells you like, okay, how much is the volatility actually moves on an average? So only 53. So like 137, 101, 53. This was back in 20. That was a COVID crash right there. I mean, it doesn't mean that the volatility doesn't come in. It does comes into a market, like it does comes into a play every year, as you can see how much it moves, right? I mean, 1, 2, 3, 4 years is enough to see. Yeah, I mean, that's plenty. I mean, the point now is like VIX is just sitting right there at 21 because it's waiting for that election. And S&P is making, let me do this, is pushing uh, here's your S&P. You do an overlay. Make it as a pink. So here's your S&P all-time high. Here's your VIX is at 21. So so from 57.15, which is right there, this price all the way here, okay, is what you call a spread. Okay, this is the gap right there. It's called, when you do two overlays, called spread. The last time that's the it so the more and more you narrow the spread is where you have to be super cautious, is because it's where the divergence is going to happen. Divergence meaning that VIX goes up and S&P comes down. Like here is where the volatility kicks in. This is where the divergence happens. You see like S&P rips to the upside, volatility crush, right? So you have to look at where volatility and S&P, this portion right there. You see all these spikes in volatility right there in VIX, and S&P will keep cracking down. And then from there, when S&P is starting to reverse to the upside, this is where the volatility dropped. That's where the divergence happened right there. And I was watching that thing right there. This is when this pink line took off. It's when the volatility comes back down. Because you have to understand one thing, the volatility doesn't stay in the market for too long. It comes and goes, meaning that it could stay in for a week or two or three. It doesn't stays in for months, you know, because what happens is like when volatility kicks in, the option market premiums is going to go up right away, right? Implied volatility spike. So when you pump the implied volatility into the option market, because it has expiration, right? It has to come off. So your IV is the same thing with delta. Your delta is capped at 100, right? You don't have 110 or 120 deltas. It's the same thing with IV. IV is capped at 100, not the weekly. Weekly can go up to a 100 or 200%. Those are based on those premiums. If you look at the percentile, okay, of an IV is always capped at 100% of an S&P. If you see S&P IV goes up to 100%, buy the market. The best way to buy the market is when S&P capped at 100%. The why is that 100% is because one is at 100, is not going to go any more higher. Okay. S&P has to pump to the upside for this number to drop. And where do you see? I gotta have to log into that. It will show you on your phone and stuff as well. Um, Show you some of the tricks when to buy the market, when not to buy the market. Show you. Okay. Um, right here. I took a snapshot from a mobile app. This is the mobile app of TOS. You could have it. You can look it up on a platform. It's the same thing as well. You have an IV. You have an IV percentile. I want you to remember one thing, okay? This number right there, anything higher above 30 is you paying more than premium. You paying for the premiums. You want this number to be lower than 30. It is worth to buy the premiums because when you have more volatility, meaning your option premiums has more vega. Vega is your volatility into your into your option market. So this IV, when market sells off hard, okay. So this is an S&P right now. So S&P for Monday, okay, is a 33 points plus and minus move. The 33 point to the upside or 33 point to the downside. Okay. And the implied volatility is only 9.15% for the next 2 days. For the next 3 days, because S&P cash option chains expires every 2 days. Okay. SPY, I believe it expires every day, every other day. Um, so for the next Friday, which is the 18th, S&P has option market is pricing in 82 points plus or minus, okay, to the upside or to the downside. It has a 13.8 implied volatility. what I was talking to you about before was IV percentile. If this number right there, when your VIX spikes, okay, when it goes up to 100, once it's gonna go to 100, it just stays there. It cannot go any higher than that. Once this number reaches 100, okay, we look for the wave count where we at, just buy SPY. This number will drop. It's going to come eventually back down toward this. That's when the volatility has to come off from the option market. The only way the option market volatility will come off when price is going to pop to the upside, and this number will drop. So over all these years, I've bought so much of the market when it reaches that 100 mark. And we were there when with the Japan carry trade, when this big spike to that 37, S&P was right there at that 100% mark. Yeah, you might have to take another day or two punishment being on a trade because, but that's okay. Just wait it out, because when option market is because these numbers, what happens when the volatility spikes, these ranges, these these numbers will go up quite a bit. Okay. All these option chains, like these implied move, the option market is pricing in, will start moving up quite a bit. So this number will go up, the implied moves. But you don't get these ones, none of that stuff, when you trade futures, ES. ES has the move, but you don't have to suffer any kind of a volatility on future market. Neither does a time decay. So a lot of guys who trade NQ futures and ES futures, they just simply play a directional move, either up or down, or however they want to have their level drawns or whatever strategy that they do they adopt. But regular options, which has these expiration, well, the futures have expiration as well, but we have a lot of time on those. But these ones, the ODT options that most people are thinking that's the quickest way to get rich, it's the it's you have to suffer this, you know. So closer and closer. I mean, yeah, the if by next Tuesday S&P has a 50-point expected move, plus or minus. So if you can take 58.15, add 50 points to it, that is your expected move. So, or you take 55.15 minus the 50 point, that's your downside expected move. So you're going to have bounces in between as well. I mean, but you only have 3 days is to see if the market is what the option market is pricing in a 50-point move. So right now, this number is not as much high as you can see for up till for another week. I mean, for 1 week, for when you look at a one standard deviation move for an S&P 500 is what we have here. S&P one standard is 142 points. 142 points. So you take 55.18 plus 142, that puts you at 59.57 to the upside. That makes it a one standard deviation move for 1 week. Okay, so 59.57. So let's see where we at. 59.57. This one doesn't show that. 59.57. That puts you right there to this 359.64 right there. This is the one, this is the next week expected move for a 1 standard deviation move from a current price right now. So if this is the case for that, I mean, if we're doing this, then I have to change this wave count even like this, like this. This is one, this is two, and this is ready to go to this next week by next Friday. So what the option market is pricing in a 1 standard, like um, the 1 standard deviation move is 142. Okay, let's see how much it did this week. Okay, the low was 56.86. The high was 5822.13 minus 5686.85, 135. So we have a 135-point move this week. That was pretty close to 142, almost a 1 standard deviation move. But the last 2 weeks, as we talked about last week as well, like these two wasn't even 1 standard deviation move at all. Look at the size of this one. So market definitely trended, it's definitely higher. I mean, here's your monthly bar is higher, weekly was higher, daily is higher. I mean, it's there's no signs for weakness. It's just why I was swings are up, except for this one. Okay. This swing is up. This swing is up. Daily swing is up. IWM is down. Okay. Because the line is, I mean, is getting the up move. That was a yesterday spike to the upside. Because this is one. It has to go to 2 to 3 to change this. Weekly time frame, you have higher bar here to new highs. Qs at a higher bar, but didn't make a new high. Q's new high is 503.52. And then this one, Dow put a weekly outside reversal bar. So I'm going to be watching this one closely. And this one. I'm going to show you a few things like on a yearly projections that you can run them as well. Your only price could drop to just above 56. Yeah, the wave two, yeah, is valid. I mean, there's nothing. Wave two after the Elliott wave is after every 5-way move, okay, you get a counter trend in wave two. Okay. Elliott wave is like wave one is a trend wave called a motive wave. Wave two is a corrective wave. Wave three has to be a motive wave, which is a trend wave. 4 is a corrective wave, and then you have 5 is a trend wave. So you have 1, 3, and 5 are your motive waves, which is the impulsive wave, they call it. And then the wave 2 and the wave 4 are the counter trend. They're the corrective waves that moves against the trend. Okay. So you don't have to go that far back down. All, as I said before, all you have to focus on this 5-way move for now. Okay, because that just emerged right there from the top of the major support. So this wave 2, okay, whatever this wave 5 ends, will come back into a play, because this is where what Ralph Elliott, who wrote this thing back in 1930, says, like, market after completing a 5 waves to the upside gets a correction to the downside in 3 waves. Now this move, this this smaller wave 2 must stay above this low. So as soon as I'm gonna keep it here, it's just gonna be fine. And if this thing is gonna come down here, there you go. Now the system will start screaming at me as well. You're breaking the rule. The little explanation mark, wave 2 terminates beyond the origin. So whatever the pullback comes here, now what we can do is we have to take this low. We don't have to go that far. We have to defend this low now, okay, against the counter trend that will come into a play. So we gotta have to find where we can find a potential support. You draw 2 versus 1. The 2 versus 1 is all you can do it manually as well if you want to do it this way. It's the same thing. See, it's gonna match. It's the regular fibs that you guys have them as well. All of them do. It's the same thing. So on Elliott is to call like a 2 versus 1. So this is a wave 2 against the 1. So these are all your fib retracement: 23.6, 38.2, 50, 618, 78. We don't know that how far the wave 2 can come down. It could be shallow as this 23.6 to 38.2. It can come down to 50 against this trend, against the motive wave. It can come as down to 61.8, and it can come down as much as 78.6. Once you get here, you got to be super cautious now to see if this low is going to come to, is going to come to a test now or not. Well, how do you know that? That 78.6 right there will give you that answer. You're going to break this 78.6, you have a pretty good chance the thing is gonna take out that low. Okay, so in order for me to make a case, I would rather stay with this wave count for now, like this one, because the trend is so strong to the upside. If this invalidates this smaller wave 2 against this one, okay, then we'll make a case here for this wave 2. Okay, I know how Elliott works. Working 2 different wave counts side by side, I know how they will work, but one will confirm the other. Okay, you cannot make a case for this. Absolutely not. I mean, you have higher weekly bars, monthly bars, and things like this. You don't make that you cannot make that big of a case for now. You have to fight this one first, okay, to see how this one comes into a play, is to see if the market keeps going up, keep making higher highs and higher lows. That's all. So this is why I have both of them, and we will track both of them side by side every day, because I know for a fact that the one is right. Which one is right? One will confirm the other. So regardless what the outcome is, corrections are very difficult to time and to trade, because they are not just like comes down in a straight line for one single session and you just get done with it and you just like rips right back up. Okay, we're gonna stay bullish. There's nothing bearish about the market. I'm not gonna. There's no point to fight such a strong trend, but we'll try to see if we can take some counter trend moves, okay, to the downside, but nothing heavy though. I cannot size any trade to the downside, assuming like, yeah, the top is in, and I'm just, you don't, I don't want to just, it's just, that's just not the right way to trade. You gotta have to work on the risk management. Like, okay, fine, you want to play a counter trend move? I played one. What I did three contracts, just a small trade. It played out. I mean, still end up paying me over $800. But I would have, yeah, if I would have sized that thing up to a 6, 7, 9, 7, 9 contract on S&P, yeah, I would have made like 3, 4 grand. But it's not the point. The point is like, I don't know where the top is. And I'm not gonna sit here and tell everyone like, yeah, this is the top, and then we're just gonna come down. No, we just gotta have to take it session by session to see if we could find weakness in order to make the case for that. But but for now, I mean, we'll focus on this and a smaller two. And if I have my backup plan in case this goes against us, then I will I will officially call this as a completed 5-way move. That's it. And then we will have some action to the downside. So that's a long way to go. Don't expect something that is gonna, but unless we're gonna get couple earning surprises, which we will, don't expect that Mag 7, they all gonna pass the test with the flying colors. I mean, 3, 4 of them is gonna miss. You know, I don't think that we have ever seen all the Mag 7s. They just reported like blowout quarters one after another. Like you can just look back, and the most important one is always like Apple and Microsoft, and Microsoft is very important. And then Amazon, yeah, it's okay. Amazon is more like into a XLY sector, and that will definitely, hit those sectors hard. Then Tesla is on his own war right now. It has no impact to the market whatsoever. Tesla is just a totally different stock. Um, Meta, communication, and then Netflix. I think Netflix is the first one that is gonna report. Um, I think I did this. Yeah. Walgreens, United, Citibank, Johnson Johnson, Charles, Goldman. It's all financial PNC. United, JB. I don't know about JB Hunt. Trucking businesses. FedEx took a hit. I don't know about JB Hunt. Probably down as well. Trucking business is not doing that great. My wife, she's an accountant. She handles a couple these. She knows all these companies, JB Hunts and all that, because she have um, like companies that they do business with them, and then she see those invoices and all that kind of stuff. So yeah, they're not, trucking business is not doing that great. Synchrony, it's all financials here. Alcoa, CSX, Discover, Equifax. Okay, that's going to be important one. TSM, Infosys, Netflix, ISRG, Crown. I mean, I don't know about financials are fine, but Netflix and these are the only two to watch, basically. These two. I mean, Alcoa, 1, 2 point move. I don't know what do you make out of those. But this is gonna be the one that could move. So the next following week. So this is why you can see the the volatility, the implied move for the next week is pretty low. You know, I mean, we'll see. 58, 15. You have to. You can Google this thing as well just to understand. I'm not gonna just go through, it's gonna take me forever. Read about IV, read about IV percentile, HV, HV percentile, HV.
Could you tell us a little bit about the HV percentile?
I mean, you can just, the main one is IV. You have to watch the IV is the most important one. Okay. Um, this is the the HV percentile is considered as the historical volatility. That's what it stands for. Okay. That indicates a percentage of days in a selective period. I mean, this historical is, I'm not, I mean,
So I got what you said, that let's say historical volatility is 28% and suddenly the IV has gone to 100% in a market crash. That's the time to buy the S&P, you said,
oh yeah,
because so that's perfect. But does it also not mean that the options are premium is very high? So
yeah,
it's the time to buy shares, not to buy
correct.
option.
Correct. You can buy leaps. You can buy, well, you can just, you don't have to, if the best way to do it is just to make a diagonal spread. You can cut down a lot of that options by selling a premium as well against the one you can buy. You know what I mean?
Okay, so when you said it's 100%, go ahead, buy the market, it's either it's through not direct calls, it's through something else,
I
some
mean,
other
yeah,
technique.
you can, you're going to pay a little bit more, which which premiums are expensive. Yes, I mean there are people who are buying as well. So if you're gonna put something on the board, you can. And if you want to pick up 3, 4 leaps on the SPY, like 6, 7, 8 months out, you can do that. If you wanted to do um, SPX, you can do a diagonal spread. You can eliminate a lot of time decay and a lot of the premium out. So there's a lot of different strategies that could help you. But the point is, like in the option market, you have to focus more on is to sell premiums. Okay. Same thing with those covered calls and things like, these are safer bets. The directional moves that everybody wants to play is just, they don't, I mean, they do come, but your odds are not as much, is because you want you want these premiums to melt, as they will melt, right? Because you have to look at this way, that premiums have a value for a very short period of time, right? Because it has expiration date on it. It's just gonna go to zero. So the premiums that expires, almost 70% of it out of the money, it's expired worthless. What does that tell you? Just think for a second. If premiums and option markets are the best way to to create a generational wealth, do you think that option premium wouldn't be in 70% in the money and then 30% would have expired worthless? But it's the other way around, right? You have to understand some of these guys that option market is considered as a hedging against your long-term portfolio. You have to set up your mind to trade a market based on a bigger time frame. Okay, on larger time, like on a bigger time frame, is to have the the view of the market. Like, I want to be in the market, this is what I want to invest the money in. And then if you're long that stock or whatever that you're holding, is where you could hedge against options. You have to look at this way, that these large institutes who manages money, you think they're putting money into an options? They don't. You think Warren Buffett trades options every day? No. It's
Yeah, I found your two videos, last two calls on the options very helpful. Are you going to be able to save those two calls to the channel rather than deleting them? The two
no, I
last.
have them. I mean, I upload them on a YouTube. It just stays there.
Okay, so those
Um,
the option ones will stay.
yeah, yes. No, I mean that the session is there, so we can just go through, and we'll cover a little bit more. But it again, it takes like when you start going into these butterflies and things like this, I mean, a single call is much easier just to buy a call at expiration at that price. You're done. You're in the trade. You just size up whatever's contract that you want to trade. You're in the trade. Then you can same way you can just buy a put, you want to come down. Those are easy. Spread is like, okay, you buy one, then you can just sell one against it, right? You can make a bullish spread, you can make a bear spread. When you start going into these butterflies, like balanced butterflies, broken wind butterflies, it has more tilt to the upside and more downside. Those are more very advanced. One of if you call your broker and tell them that I trade broken wing butterfly, they will be surprised. Okay, I can tell you it's not a very um popular strategy. But
I think we can rely on you for that. But my question is, like, let's take Boeing for example. You put on a trade, which is a you bought time on that. That's good. But if you pull up the BA, I think its IV percentile is like 99% or something. It's a good stock. So I'm thinking of what you just said that institution would sell premium, but we bought premium with time. Is there a strategy where we could sell a put spread and still make money with time?
you
Or should we
can
be buying the calls? Should we be buying the calls at such a high IV? Yeah.
the thing is this now, if you have a call that is all the way out in November or whatever, you can sell um shorter dated call against it that will turn into a diagonal. But the thing is this, that as soon as you're gonna sell one against the one that you have, it's gonna cut down your delta quite a bit. Okay. You have to understand that way. As soon as you're gonna sell one against the call that you have, if you long 50 delta and then you selling a call, okay, well, if you want to sell a call, how many delta you want to sell a call for? 30? So that 50 that you're holding is going to cut down to what? 20. Now $1 is going to move, you're going to make 20 bucks. Instead of $1 is going to move, you're going to make 50 bucks. So diagonal will do is it's going to cut down the delta for you because you're selling one against your call, but it's going to give you the edge on time decay. Okay, because you bought a call here, okay, let's say for 59. Okay, so you take what? 58.15, add 101 is 59.15, right? Just round it off. So I'm just making it 5,900. So you buy a 5,900 call, like the option market is pricing in a 101 point move to 21 October of 24 expiration. You have 9 days, okay, for 101 move. So when you do that, okay, so 5,900, you're gonna basically, so the price is at what, 58.15. You're going up to a 5,900. So that will give you roughly probably like 30 deltas or 25 deltas. So now you have that. So that will cost you almost, say, 2 grand for one contract. So you paid $2,000. Now you long 30. Now you're gonna have quite a bit of time decay against you. It's gonna be almost 250 to $300 per day just to hold that premium per day. Okay, because it's only 9 days out and you're going way out of the money. And it's just giving, I don't know the option chain yet, but I'm just giving you an example. So you have 30 to 25 long delta. You paid $2,000 for it, and you're gonna pay almost this much per day just to hold those premiums. So now what you do is diagonal is when you buy a long dated call, and then what you do, you come back down here into the fifth and you sell a call here. So as soon as you're going to sell a call, okay, it's going to have delta as well, right? Just as your long calls, you selling calls right there. So how much you want to sell the call here against 30 or 25? 20? So when you're going to sell a call here for 20 for a shorter expiration, it's going to cut down the delta down to 10 now. So S&P moves up 1 point, it pays you $10. But that's when you're going to sell that call, the advantage that you have is going to eliminate this time decay that you have. You cannot win on the option market on every single angle. Like it doesn't, that's not how it works. There is an upside and there's a downside as well. There is no one of a kind strategy that you can say that option market has this strategy, that this is it. If that's the case, that everybody would be trading that. Everybody would be trading that. There's always an upside, but you have to be willing to give the downside as well at the same time, because you're buying and selling. The buying and selling has it has the advantage, but my point here is that when you sell versus when you buy, you take advantage of the passage of time, which is the time decay. Here, you simply fighting time, which is I just showed you roughly $200 to $300 per day, is to get to the 5,900 mark. This is what the option market is telling you. This is what the expected move is of 100 points for the next 9 days. That 9 days is going to cost you this much just to sit on to hold those premiums. So meaning that the market now has to move fast as you can in your favor to get to that 5,900 mark and as little as possible. So if this thing goes up $1,000 in one single day, so the next day you come in and you open, the market opens, and now you balance flat, and now you position down to 750 because this is what you paid overnight. So it's this time is not going to go away. So these covered calls, that poor man strategy, whatever people calls it, and that a lot of people trade covered calls, is to buy 100 shares of a company. You have to have 100 shares. You cannot have less on, has to minimum 100. So once you have 100 shares, then what are you doing? You selling calls. So why are you selling calls? You have the 100 and you just want those calls to expire. So what you're doing is you're just collecting that premium. This could be a $3 $300 premium, $4 premium, that's 300 or $400. This is why the people are saying about those income trades. You buy 100, sell a call. Buy 100 shares of the company, sell a call. And then if it doesn't go your way, then your stock calls away or whatever, and then it's a different thing. So there's always a risk. There's no such thing out there that is going to be a risk-free trading,
This is very useful, but my question was about the high IV situation that you mentioned.
Once it's gonna go there, I will show you much better that way. I mean, you just right now. I mean, I'm just making a point now that once I will see that, because I watch every day. Once we'll get to that 100 mark, I'll buy with you as well. Then I will show you that way. When IV will spike, it will. Then I will walk you through this option chain. Then you will understand much better.
No, I do. But you would still be buying call is my only question, just to be prepared, not selling a put. That's all I wanted to ask.
You can buy a call, correct. If you wanted to buy a market, you just buy a couple months out some calls. You're
Okay.
gonna you're gonna get that bounce. Oversold bounce on the market is pretty nasty.
Okay. That answers my question.
You
And
know,
it's better than selling a put. You buy a longer dated call. Got it.
correct.
Got it.
Because the implied volatility out of that 100 is not going up anymore. It's gonna come off. So there's all these numbers that they're just gonna went up so high. Okay, so the price has to get the bounce for these numbers to come back down. Okay, so then slowly the VIX starting to drop. That VIX drops is gonna drop this IV percentile below 67, 50, 55, like gradually start coming down. Then these numbers will start dropping. So it's everything, everything moves quite a bit here. Historical wallet percentile, you don't really have to focus that much on this one. It's in um, the main one is this. You always have to watch IV percentile. And when you're buying premiums, you have to look what the implied volatility is for that premium for until that expiration, and what is the expected move. So these are the most important ones before you push the buy button. You should know what the price is, what the bid is, buy and sell. Now you take that option price. So this is why what I love about option market is that option market price in ahead of time to expect a certain move, expected move on a stock. But if you just buy shares and people who don't have the knowledge for for options, okay? Now let's say for a second is that you buy SP like SPY, right? Let's say you buy SPY at 580. And you buy like I'm talking about just buying shares, okay? Now if you are buying shares and people who don't have the knowledge of what would be the expected move that I would expect, well, you have an option market that is pricing in a year ahead of expected move for you. So you should buy something based on let's see. Hang on. Oh, you want to learn those? Oh, you want to see? Let me. I have to. Give me a second. Oops. Did I switch screen? Which screen do you see now? Oh, I'm sharing that number at 3 now. You see this Apple chart now?
Yes.
Okay.
One, two, three, 4 grid plus
Okay.
list of bunch of stocks on the 5th grid.
Okay. Yeah. Yeah, I switched the toss background back to black. I couldn't even see. Yesterday was so bright. I was like, I cannot even see any the screen because I sit right by the windows. Um, And eh, I did it went over there. Hang on 1 second. What am I on 2? Yeah, do you see Thinkorswim now?
Yes.
Okay, good. Okay, here's an S&P. Do you want to know about the Bitcoin?
Yeah, I was playing around. How I don't really use TOS to buy and sell because I don't put
It's
much money.
very,
I just use it for analysis purpose. But for other brokerage account, I don't have a future trading permission.
if
I have only future trading permission on TOS. So I'm thinking of moving some money to Schwab. But I couldn't really figure out. I took a screenshot of what you were doing when you were explaining how to trade future, but I couldn't really figure out. So if you could use the Bitcoin future as an example and walk through how to analyze it or how to place order for future trade for future.
yeah, that's fine. I'm gonna just let's go back to the point that I was making. Let's say you wanted to buy SPY, right? Or you just want to buy any stock. Okay. Um, let's say the volatility spike, we have our wave count, we have our swing, we have our potential support that we could buy something there. You just buy shares. What you would normally do? Click on ask. Here's your price, 100 shares, confirm and send. Boom. Whatever you want to do. What you want to do, 50, doesn't matter. Okay. It's 579. It's not going to be cheap. So let's say you buy 50, right? Now you just buy shares. So $1 goes up. You analyze this thing here. So it's 579.80. You change it to 579.80. You make 55 bucks. Here. So you made 50 bucks. Okay. For $1 move, it's 50. $2 move, 100. So it just goes on and on and on and on. Right? So that's just from moving this bar, you can see your P&L open, changes, and you don't have any time decay, you don't have any gamma, you don't have any theta, you don't have any vega. You simply have whatever the number of shares that you have. So that is your upside. So when you buy shares, it depends on your time horizon, right? The option market here gives you a lot of information that what would be the expected move that you could expect for the shares to rally in the upcoming months. You can just view at the option market that, okay, as SPY is 579 is the price that I'm paying right now, right? If I'm willing to stay in a trade for the next 433 days, that gives me 108 points. Okay. So the shares that you just bought, it has 108 point expect option market is pricing in an 108 point move for the next 433 days. So don't you think that the money that you just put for the next 433 days, you think like this number plus or minus would be worth 680 bucks? So I'm looking at a 100 point move in the next 433 days. This is what the option market is telling you, is already pricing in ahead of time. So the person who's buying shares who doesn't have the knowledge of to how to read an option chain he's clueless, right? He just blindly buys it. There's no clue like, okay, yeah, it's gonna go up, I'm gonna make money. But it's gonna reach to that certain point as well, like, okay, and hit that mark, this is where your option comes into a play. It becomes of useful information for you, what you could expect for the security to increase or decrease by that time. Don't you think that makes it much easier for you? Like, okay, if you in a 50 shares and you're willing to go in whatever days that you're whatever days that you would be willing to stay in a trade, you just keep watching these expected move. What would be the implied move for those shares that for you to sit on. So from 579, like, okay, so you bought 50, 679, like $5,000. So $5,000 for 433 days is the expected move of 100 points of an SPY if you buy 50 shares on Monday morning at the open.
Well, what's the difference between PL open and PL day?
This is per day, changes based on like as soon as the market opens, your daily profit and loss. This is your P&L is the open, is the overall profit on your trade. That's what you made or lost so far. This is changes on a daily basis. Oh, both changes on daily basis, but this is well, your final result is going to be basically. So you have open and you have a daily P&L. So the example for this is, let's say you go 34 out, you buy this, let's say you buy 4 calls, 981 premium, analyze this. So, okay. So now let's say you buy them at the open on Monday, paid 981, but 4 contracts, 185 long deltas against your theta. If it's a 578, price goes up to 580, you made 247 bucks. So $247 will remain the same until the close. So as soon as the day will be over, but as soon as the bell will ring, okay, and then at midnight when the market resets, okay, like all your updates, the account, the open position, closing position, everything will update. This will go back to zero the next day. This will remain at 247. So this is the profit that you made, but you carried over for the next day. So you're up 247 bucks. So the next day, the 247 is going to come. Now the market opens up flat. You add extra day to it. Now you paid your time. Now you're down to 149. That was right there at that next day. Okay. And then from here, now your trade is up roughly 149 bucks. Okay. So now if S&P drops, okay, now you go negative. And then you close out that trade. This is your actual balance right there. And then from there, you can turn back up, but you just keep adding time to it. So your P&L open, like when I do those, what we made on a trade and things like this, I do those snapshots all the time. Like this one. You see, this was the team right there. So the price went up all the way up till here. I had like 54 deltas. I was positive theta. You have to know how to make spreads. Like this, I mean, it went crazy. I wasn't expecting that fifth is going to extend this much, to be honest, but oh, well, what it is, what it is. But even the fact that I made a trade out of the money, but look how I keep the theta. It doesn't cost me anything to hold these premiums. I wanted to play the expected move, and we got that right after a couple days. But each day for me to sit on a trade, it's not costing me anything. I can sit on these kind of premiums for weeks. What's the problem? It doesn't hurt at all. But the only advantage of the only way you're going to make this work, you're gonna trade spreads. But if you're gonna come down here to these single calls, that what most people are doing all these FOMO trading, you know, market up to the 34. Everybody focuses on so much on monthlies, so like they don't want to buy weeklies because there's no difference. Same thing. Okay, it's the same delta, same premium. Just some people are so married to these monthlies all the time. Okay, this one has 6 days out, 30,000 volume yesterday. $3.31, 580. So everybody's now is trying to attack this 580 calls. So, oops. So Monday at the open cost $3.30. Analyze this. Go back to reset this thing. Now you bought one. Next Friday, 3:30 call gives you 46 deltas, 1 point against 34 theta for one contract. So you bump it up to 5. So that gives you $1,650 risk. There you go. 1980. That's $2,000 risk. Now you have a $2,000 risk. Gives you 278 deltas against 204 theta. If this moves to 580, okay, you're not going to break even on this on this option until you get here, because you're buying the 580 and you're paying 330 premium for it. So your break even point on this trade is $583.30, which is this line right there. This is when the strike will, that's when you're gonna pay for the strike plus the premium that you just paid, right? The point here is that it doesn't matter how much is this thing is gonna move. You're not gonna get rid of this. This is lingering. This is gonna sit in your head every day, because the value of this premium is for the next 6 days. It has an expiration date on it. Okay, so it has the value for a very short period of time. So the market right now at this point is telling you that it has a 46% probability that it will close in the money. So these ones that most guys out there are willing to pay, these ones. Look at the volume on these one, 30 cents, and this 14,035. Look at this one activity here. But you don't see the actual cost. You buy, okay, so you buying 24 deltas. Let's do this one. Cost you 121, 585. So you went way out of the money. Now you carry 24 deltas. Now you have so you have 121. Analyze this. So let's bring this one to probably, I'm going to try to keep them at 2,000, both of them. Here you go. Here. So 16 contracts at $1.21. Okay. So you're going to pay more commission, same cost. You have $2,000 cost here, which is at 580. You paid 330 for it. This one, you're willing to go out. You're willing to jump 5 more strikes out of the money because you want to pay a $1.21 premium for it. Now you have 16 contracts here against 6. You're going to pay more commission, but your cost is the same. You're willing to pay 2,000 for this one, and you're willing to pay $2,000 for this one, right? Now the difference between this is your net cost is 1980. That's for your 6 contracts at 330. So it gives you 278 deltas against 204 theta. Versus this one gives you 390 deltas against 367 negative theta against you. You're going to have more because the premiums, the option premiums, which are way out of the money, and it has extrinsic value. The ones are here, it has intrinsic value. So every time when you're going to start going into, I'm going to show you both 3 ways. So you have 580 almost near at the money, right? For 2,000. Then you have 585 here for $2,000 cost as well. So your cost is the same. So it doesn't, so what difference does it make that if you trade a 580 compared to 585, but you're paying $2,000 for it on both sides? But in this one, if this thing moves to 580, your 16 contract, you made $550 same day. Versus this one goes up to 50, 580, you make $383. Remember, we paid $2,000 for each strike. So you have 383 versus 551. But the thing is this, that if this move right there has to move pretty fast for you to reward you pretty big. But the point is, like, if you carry over these trades, okay, that they will hurt you pretty bad. These are the trades are to stay in options for like just for a couple hours. For one day, that's it. We're done. You cannot cash that expected move for 1.5 points. There's no point to be in that trade for the next day, because regardless, if this thing will pop another 48, another 2 more points, but you're gonna pay them back $400 overnight. So if you get the same expected move, let's say the SPY pops from here all the way to 582, yeah, the reward is there. You paid 2,000, you got 1636 in return. If you got to move right back to 582, you don't have to worry about this one much because you got the expected move that you wanted in the next 2-3 hours. What you're trying to do, you try to time that move. You have no clue. I mean, you think it's easy to time the market? That's the most difficult and the most hardest part in the market, is to time the market. Where is the top is, where the bottom is, where we will have the support, where the price is coming down, where it will stop, where it will rebound. These are the decisions we all have to make every day. It's a very emotional game, but more and more you sit in and staring at the chart, it's not going to do any much. All you're doing is just killing yourself, because you end up making you're going to have different thoughts like, oh, I was up 600 yesterday, I should have cut the trade, now I'm down, now I'm up only $300. How many times we go through that part? We're up 600 one day and down 300 tomorrow. And then you're always thinking like, man, why should I just close that damn trade yesterday? I would have just cash out $600. And then you went back to negative. And then you get even pissed. Then you get even more pissed off. Like, what the hell? It's not in our hand. I mean, you don't get to decide that which way the price has to move. You just gotta have to see what my swing is, what my wave count is, what the RRG is showing. But if you have enough time, that time will reward you if you're right. But if you just fighting these 2 3 point moves in the next 6.5 hour session, yes, the reward is there, but your odds are very low. Very, very low. If day trading is the only way to go, the whole world is sitting home right now doing day trading. It's the one of the most hardest job right now on the planet Earth is to throw money on the board and you looking for this 3 4 5 point. And how often does the market moves 3 4 5 points every day? Barely. So there's cost here. Like the thing is this now, let's say you get this move all the way up till here. Look at this each day. It doesn't go away at all. It doesn't matter. You can push this thing all the way up till here. Look at this. It's brutal. You making that money on the way up. I totally get that. But look how much you're willing to pay in return just to hold these damn cheap, worthless premiums overnight. It doesn't matter if the stock opens up or down. You're gonna pay this ticket, this price. It doesn't goes away. Look at this. Yeah, the reward is there. Don't get me wrong. But you just have to look at like, okay, how much it can move. It hit it when expired. So what you doing right now is basically you throwing money on the board and you're just fighting time. The time is against you because the value those premium has, it has a very short duration on them. Then they're gonna expire. This thing can expire in the money for like 420. It could expire in the money at 335. We don't know that, right? It could close at 350 by the time the premium expires. You don't know it, but nobody knows that. It could expire 630, 930. But it depends what kind of a rip the market had in the next 6 days. So these traders out there that who are paying this, now you gotta bump these up quite a bit. I'm just giving an example with 2 grand. Here, 2015. Look at this. This and this.
So Mo, I think that like ETF, like SPY, it doesn't move that much per day. But I'm wondering, like Hustle Guy, he usually makes like 10K,
Yeah, but he sized up a trade $25,000-$30,000 as well.
for example, like he did he
Okay,
made
here.
money on MSTR. He posted his trade, and he said that he bought weekly October 11th call
Yeah.
when on the dip on Thursday, and he closed it on the following day, yesterday. So MSTR, it moves a lot. So
Yeah, it's moving. Yeah, exactly. I mean, again, you have to like you want big reward. It's all big. You have to analyze your trade. You should know exactly what you paying, what it is costing you to hold those premiums.
Yeah,
Here
and
is it is 1,000 contracts, 590 calls, 31 cents per contract. 1,000 contracts cost you 31 grand. Your 8,516 long deltas. If this move right there goes to 579.80, there's your 10 grand. All you need is just a 1 point move. So these 10, 15 grand numbers that you looking at is this. But don't forget, you cannot hold this thing overnight. Look what is going to come to you next day. So if you are willing to do that, you can play this game. Anybody can. Are you comfortable buying 1,000 contracts at 31 cents or 31 grand for the next 6 days? You just have to ask yourself the question. Everybody is different. Not everybody can willing to throw $30,000 for the next 6 days for this, unless you have a huge account. And if this is your risk tolerance, and this is like pure gambling, you know, all you're doing, like, what if this 1 point is going to go against you? There you go. Now you're down 11 grand. So your 31 is going to be 21. And then you end up holding these premiums because you have 5 days now, because first you have 6 days, the day passed, now you have 5 days left, hoping that the next day market can get the big pop. Okay, market can get a big pop. Add this, and now you're gonna say like, okay, I'm gonna go up 2 more points. So 577, 78, 79. So 579.89. There you go. You're still negative. So you lost a point yesterday by holding these premiums. And then the next day, S&P jumped 2 more points, still gives you a negative position. You're still not out of the hole yet. That $7,000 time decay become 10 grand. You see this is a dangerous game. If you are comfortable with this, you can play it. Nobody's stopping no one. It's your money. You know, I tried this, not the 30 grand. I tried doing day trading. I mean, I've been trading for a very long time. I tried this thing. I just like, I was like, no, I can't do this. This is, it doesn't, I swing trades here, there, like, oh, I just don't, I don't think you ever see me paying like 30, 25 cents premiums. I don't do that. You know, I have never opened a trade with 30 cents and 40 cents and 50 cents premium trades or dollar premium trades. Never done it because they're so difficult. Your odds are so low on those ones to,
yeah,
yeah,
but
you can get lucky. Yeah, the reward is there. But what are your odds?
yeah, but if you look, like Hustle Guy, he
Yeah.
look he looks at the levels that you post
Yeah.
every, and then it looks like he buys, the weekly call when the stock hits S1, S2, S3 definitely
Yeah. He's
big,
out.
right? And then he's out
Yeah.
on the same day.
Yeah.
Or
That's
the following day, the latest, he doesn't hold it. more than 2 days or 3 days.
Yeah, because it's gonna kill you. Well,
Exactly.
the premiums will be, here you open a position here, right? You got a pop right there. Look what you're gonna pay. Also, you're up 21 grand, thinking, yeah, market is uptrend. Of course, everybody knows that. We're going nuts. You can get more upside. Yeah, the reward is amazing.
Yeah, especially, yesterday he booked the 13,000,
Yeah,
return in one day, buying October 11th expiration MSTR 180 call. So he posted that, yeah, I bought yesterday's dip. So he must have bought the, out of money option. And yesterday MSTR moved a lot
I know.
because Bitcoin moved a lot. So, it was a big win for him. So I was like, wow, number one, he's so brave. Number two, he's looking at the same information that we are looking, but he always wins. It's like, oh my gosh, what's the secret?
He's just buying and he size up trades. How much? So he had 10.
Yeah, he bought October 11th expiration, 180 MSDR,
Yeah,
you know,
180 calls.
yeah, calls, 10 contracts.
So he went up 11. So he paid probably 1737.
He must have paid like 5.
Yeah, 580. So 580 cost him $5,800. $5,800. So this was 1011, which expired yesterday. So $5,800 worth of a risk. So those $1,500 worth of a risk went up to 303% total return. We made 200% on those. So double the money, yeah. That's the $5,800 trade, 10 total. So you take 1157 minus the 1737. That's your net cost of 180 calls, and then you put $5,800. That's it. You made 17. So if you had, again, MSTR is, yeah. If it had a pretty big move, yeah, this is the move that is going to reward you pretty big. That's the you cannot see the chain now because it expired. Bitcoin is the futures right there. B/, you gotta use that. You gotta use that slash BTC V24. So this one right there, Bitcoin future October 24. This is active right now. Is good for 13 more days. Okay, the Octobers are good for 13 more days. And then if you're gonna have to go back and change it to the, what do they have? See, this is the October. They will have it probably for September. So if I do BTC, there you go. /BTC will show you this. So you have January, March, October. These are all 25. So it's going to be, next one will be November 24. Then December. You don't have to put this because they have these codes here, F25, H25. All you have to just do /BTC. It's going to narrow it's going to open up the option, the future chain for you, these expirations. Because right now, if you just do October, it's going to show you all Octobers. You see right there, the 13 that matches with that 13 right there. So like you're not gonna see 20 a lot of calls and put this is expensive. This is not cheap. You need these are leverage as well. Keep that thing in mind. They're gonna hold funds against you before you place the trade.
But when,
Um,
when you went through the future trading last time, last
I'll do
Saturday,
it. Hang on.
you do the option, right? You just bought the future.
Option correct. Yeah, you want to buy shares. Yeah, this is options. This is right there. Bitcoin futures. So now if you want to go up, you want to go to BTC. Let's say you want to go to December. December has 76 days. Okay. So if you wanted to buy it, just you bid and ask, all you have to just click on buy, and then this price pops up here. So you could so you buy in December 24, one, and just move them here to the mid, this here natural mid, analyze that trade, right click, analyze. It's going to bring you here to the sheet. So now this one, you are 5 deltas long, okay, per point, 1 point. This move like this, it can make you year, basically. You know, a 34.85 points on BT on Bitcoin with $5 is massive. So let's add that. So 63 to 80 plus 34.85. So if you would have bought this one, 66, 765, you made 12 grand. $12,775 to catch a 34.85 move. Because each single point is $5 because you long 5 deltas for one contract. So if you make it a 2, it's 25 grand. But keep in mind that one contract of a Bitcoin, because it's leveraged, they're gonna hold $127,000 off your account. So keep that thing in mind. Okay. If you do 2 contracts, they're gonna hold $254,000 off your account.
Yeah, you can do the dash slash MBT. It's the micro, the mini, whatever, the mini Bitcoin. Those are a little bit more affordable.
What is the ticker for it?
MBT.
Oh, the micro one.
That is about 2,500. It's like 1/50th of that. So only 2,500 capital they need for one contract.
Yeah. 2,500. Yeah. So you can do this one. This one gives you 10 cents. Okay. So give you 10 cents per delta. Why this thing is okay. So now you're long on the mini 10 cents against 5 on the standard ones. So that's quite a bit as well, right? What the 10 cents, because you have to look at the monster spread on this thing is huge. You can do 50 cents. You can just play the move from here to 64. That's $1,200. So the 5 on the mini will be 12 grand. So you can these are affordable trades. I mean, you know, and you can do these ones and play those levels that I post. I think I did this one yesterday. There. This is for the weekend. So we have this. So now Bitcoin 63,675. If you're looking for a move to 64,670 is the upside target. That breaks right there. That will be the move to the upside, and then 2 and 3. So 64,670. Oh boy, because I changed the ticker because it changed the So this one, $64,670. 64,670. So 64,670. Well, I don't know where the future is gonna open. That puts you at $1,600. That is with 5 contracts with the leverage at 12. So you could one is $300. So consider if you, oh jeez, consider, because I don't have the mini, that's why I keep changing, because I have that thing there. No, why did I change this? Here, you can trade these ones with mini as well. With one of them, they hit to the penny. You know that. These swing, these are fib prints that I do. I have to run different high and lows, and they're gonna hit to the penny. I can tell you that for sure. You're gonna crack this. This comes in play. It's the same thing here. This one breaks. You set up a price alert here. Okay, here upside level is breaking. You're gonna have 64,670 in play next. So you could. I mean, again, I'm not gonna. If I do post this one because I have 2 guys who are doing this. That's why I do it for them, because they're those Bitcoin junkies obsessed with Bitcoin. I have Coinbase, so I track here. I don't, like how many of you guys know me for a long time. I didn't even do any Bitcoin for a very long time because I just didn't really have much time to. Then I start putting that thing in Optima, and then Bitcoin, I got the chart, and then I got the RRG, and I was like, oh boy, there you go. Now I'm in Bitcoin every day. I start posting on Twitter as well. People asking me, Mo, can you do the next update? I was like, no. I was like, there's not that much to update. The Bitcoin right there is here. This second swing is almost in. I mean, it might get um push, but if we look at the RRG right there, is you see where the weekly is going? And this is exactly where it was. And I was like, you have a sideways trending channel. You have weekly RRG that is improving. Just start buying. That's why I have an account with Coinbase for a long time. Then I deposited money in there and I bought Bitcoin right there to that, right at this price, right around here, 54,707. So I let it work. Let's see how it goes. Because that time when I bought them, because it has this fail swing in 5, and I know how much I do swing trading every day, and I know how swing works. It's like, and I just keep saying, telling you guys, like, watch this swing high right there. It's like, if this swing high is gonna get taken out right there, the 64,931, I was like, we're gonna start a new swing to the upside, and we did, and went to number one. You see, so I know what these fail swing does, because it's not the fail swing, because basically what it is the swing right there. You see the it made a low here, lower high. It needs to make a lower low below this. It didn't. It stops right there. And then when it's starting to reverse, and when you start getting these gold signal, and then when you have this RG starting to show you improving quadrant toward, sorry, the lagging toward the improving quadrant, most likely these swings are going to get failed, because the momentum picking up now. Those are the fail swing, has a very high probability is going to turn into a full swing. And then this comes second, and then you look for a third one up. It will take a couple weeks. I mean, the worst case is that Bitcoin from here now can just take another leg down. Okay. Because we have a high here. So basically, I mean, it looks good on those swings. This is a 1 hour chart. Although I was showing you the daily chart over there. So this is, you see the low right there, and then from here it needs to break this high right there. Then it will break this channel, but this is a 1 hour time frame, and then from there you look for this upside. You know, it's a good setup. Momentum looks good, and if you just play in a breakout, the thing is this: now if this thing backs off, I mean it can. It doesn't mean that the thing is the downside is going to come into a play. The only way the downside is going to come into a play, it has to break this 59.90. Okay. If this thing breaks, if the price, let's say, comes like this and it just stays around like this, it's okay. There's nothing wrong with it. That's fine. It came, got the resistance, backed off, and then prices keep thinking. I mean, if the price starting to fall right there, like this, it's going to have a pretty good chance it's going to hit this. Going to be a minimum downside. So it means that it's just making this move. And then it has to have to look for where we could find the potential support again for this thing to make a move back up. But the point is, like, on a 1 hour chart, yes, it has the down slope to the channel, right? So call it as like down, has downtrend to Bitcoin right now, because this is based on 1 hour time frame. Keep that thing in mind. So when you're looking at the price at a 1 hour time frame, and and thinking like, okay, should I buy? Should I don't? But then when you start going and looking at this, I was like, wait a minute, why wouldn't I buy it? You know, if gold signals are coming, RRG looks good, sideways trending channel. Here is the low of 38,460. Here is the high of 73. What do you want to come back here again? I mean, that was the throw over that it has from this channel. When you have a throw over here, what do you think is going to happen here? Same throw over. Remember the Newton law, the physics that we all studied in school? You have a throw over here. You're going to have another throw over to the upside. I can tell you that. Well, I don't know
Oh, is this
when,
old chart?
but
Oh, is this an old chart?
huh?
Is this an updated chart? Because I thought the price already reached 63,000 on
Well,
Friday.
yeah, it's closed over because Optima doesn't run data over the weekend.
Oh, so it doesn't have Friday's closing price. Got it.
Yeah, it's going to update on Monday at the open.
Yeah, it was
I
about
don't,
63 something. Yeah.
So
yeah,
Mo, I have
it's
a
right
question.
there. Do you see the the banner right there? That's the current price, because it's not, because I don't have the 24/7 Bitcoin here on Optima. So that's why it doesn't update, because I know the Bitcoin is moving right now. So I can look it up on Coinbase on the app.
Question more.
Hmm.
Can I? So I'm a little bit confused, when those, swing prints, you said that let's hypothetically assumes that, go back to the BTC USD chart. So let's hypothetically assume that the 58,802 was the bottom. It stopped there and it went up and went above 64,931. Oh, no, went above 66,454. Then the 5882 prints 2, and then the swing goes to 3.
No, it's not gonna go to 3. If the 2 is not in, okay. If the 2 is not in and you don't actually see the number 2 print, and if the price comes down like this and it just takes out this high right there, all it is gonna do, this 1 is gonna extend.
Oh, I see. So
Okay.
when the
You
2,
need to see the number.
okay, so when does the 2 print? It
No,
has
yeah, right.
five?
You're asking me $1 million question. When is that thing is
Oh,
gonna happen?
hold on, I always get
It was
confused.
pretty damn close because I had this thing down when this, okay. When we had this fail swing, right? And let me show you this. You're gonna understand this one better.
Does it have to be below F5 level for 2 to print?
Okay, let me show you this way. I did this right there. This was when Bitcoin, because you can see it back now because I cannot remind. This was on September 13th. No. This one. So this post was September 8th. Okay, at 3:39. I start looking at Bitcoin. Okay. And I was like, this is last year, 16,000 to 44,000. And this is this year, 38,000 to 73,000. What I'm trying to do, I'm trying to make my point is this is where we started the start of the year, right? So here we got the initial move, call it a 3-way move or whatever you want to call it. But you have to look at this. When I start looking at, I just took the low to the high, ran fibs, and I was like, this thing right there looks a pretty sideways consolidation, which broke to the upside, and which it did. And then when you looked at the time on this one, it lasted 193 days. So 193 days, the Bitcoin was consolidating sideways, and then it broke to the upside. So I took, and then I'm started looking at this one. I was like, okay, here's the low, here's the high, and I'm just looking at the same. But now this one, instead of being a little bit more sideways like this one, it has a little bit of a tilt to the downside, as you can see. You have to connect these tops, this top, this one, this. You have a 1, 2, 3, 4, like 5, 6, 7 tops. Like these are the daily bars. But the only difference is like this is pretty much sideways. You see, it has a double bottom, right? And you have almost like a quadruple, call it whatever, double, triple, quadruple tops. But it's just more sideways. This one has a little bit more tilt to it. This was the throwover when you connect a channel, because I know how to draw channels. So you take this low and it got the bounce here. This one got that throw over here. And then how fast the price, when I looked at this daily bar right there, I was like, this is crazy. The way the Bitcoin reversed back to the upside after this throw over. And then again, price is coming right back down. That's and I see it was 179 days on the time when I did this, now in October. I was like 193 days is a matter of a couple more days. This is exactly, I was like, you know what? Price already bounced from this. I don't have to draw a channel all the way down here because this is a throwover. This throwover is going to met the same way to the upside one day. Okay. So 193 days, I was like, okay, it's gonna be a September 23rd. But the point is, like, by September 13th, it already got the pop of 10% to the upside. I was like, I'm so close on a time. I mean, that was 184 days, but then I did this update. And I was like, I'm so close to that time. What is 1 week? I mean, it's not gonna crash another 30,000 points. I was like, I'll add if I have to. You can't like exactly time the move, but you can come really close to it. And then you can expect, like, okay, um, uh, the price will see the move. Because what happens here, look at this RRG when I did the original post. You have to pay attention what I show you every day, okay? Look when the RRG was like pushing right there. And I know the way Bitcoin moves, Bitcoin is not going to stay down for too long because Bitcoin has a lot of momentum, right? There's a world is buying Bitcoin all the time. They're crazy about Bitcoin. I was like, momentum is going to pick up pretty soon on Bitcoin. I was like, I'm so close on this time as well. That's what I put money in Coinbase and I bought a lot of Bitcoins. And then from here, 10 days later, it got that 10% pop. Look how this RG reverse. See how it's starting to pick momentum? This right there and this, because I watch a lot of rotation, okay, it's very difficult and hard to line up two time frame of daily and weekly at the same time in a same quadrant. It doesn't work that way. It's very rare. I do kind of see very few stocks that turns on two different time frame in a same quadrant, but it's very difficult. But this is like a one of a kind. I was like, I know this thing for a fact that this thing is not going anti-clockwise. It's gonna go clockwise. It's gonna complete this rotation. Got a long Bitcoin. I've just keep tracking Bitcoin every day. Then I start doing because I don't have the live data here on Optima for Bitcoin. But I have the Thinkorswim, the futures, and then I can look it up on Coinbase. And I was like, I don't have to draw 1 2 1 2 all these contract the labels and stuff. I was like, I have my swings. I just follow the swings. So now Bitcoin, this weakness that the Bitcoin had right there, okay, you see right there, our RG right there. So Bitcoin can take a little bit of a pause because the momentum right now is weakening, okay, which is okay. Okay, I mean this weakness is already here. It's confirming this thing. The thing is this, that I know a lot of you guys don't have this. There's a lot of things that goes into the RRG that makes it really good. There's what does it have? It has, read this banner. You have a momentum, you have an angle, you have distance, heading, velocity, quadrant, right? You have so many of these. You have to study all of them one by one. On a simple scale, okay, when you look at a compass, that's your benchmark. Okay. So when you look at a compass, what do you have here? You have a 0% here. We all studied at school, right? You have a 90% angle here at 3 o'clock. You have a 180 here at 6 o'clock. And you have a 270 here at 9 o'clock. Okay. So what are your directions here? This is no. This is south. East. Right? North, south, west, and east. 0 degree, 90 degree, 180 at 6 o'clock, and 270 at 9 o'clock. That's your clock. Just picture a clock in your head. So your main benchmark is you can set them as S&P to track any stocks. You can do $1 as a benchmark. So right there says your benchmark. So you can set it up. What do you want? So when you're tracking Bitcoin against the dollar, because we're paying dollars to own Bitcoin, so I kept them as a benchmark as a US dollar. So the momentum right now is definitely weakening. That is confirming, oops, that is confirm this weakness right there the Bitcoin just had. So it doesn't mean that Bitcoin cannot come back down. It can. This is why I have the, jeez, what did I do here? I did this. Oh, but I gotta clear this thing. So it can see a rejection here because we don't know that. If the rejection comes into a play, that's fine. We'll buy more. No worry about it. But the point is, like, if we don't get the rejection and we slowly, starting to move right back up, well, this is the breakout that we're going to play now. We have a high here, high here. Here comes a test. It did kind of poked above it yesterday, but kind of ran out of time yesterday because of all the move, then the future market closed. And now it just closed right there. So can it open slightly lower? It's okay, it's fine. You just have to watch this. Watch the 59,990 and see that we don't come down from 63 to 80 to make that big of a reversal all the way back down to push this thing. Okay. So RG will improve. I mean, now the point is, like, is it better to be in a trade? I think it's a good art to be in a trade, is because we have this weekly looking pretty damn good. Okay. The only thing that it looks good, but it's too close to the center point right there. It's if it's further away from the benchmark, you just get a lot more alpha. It means that the security makes a wider rotation around the clock. Closer you are, you have you're not gonna have that big of a monster move. You call it this way, because it's close. But if the daily one moves, because it's the way it is moving, it's kind of away from this benchmark, but you have to look at this 2 different time frame. This one is per week. This is the week that had ended. This is a week before. See, when it's starting to curve like this, that's when we get in. And just wait it out and see if there's a lot of trades you guys are cashed it out so far. Is this all based on these RRG that I track? It helps. It helps you make the right call, and it is one of the powerful tool, I would say, that I love to use, that I use every single day, is to find trades. But the finding trade that's what takes time, So I can only do much after hours and before the market opens. But during market opens, because everything is moving, jumping on trades without looking at, like, what the momentum is. And, it's difficult. I mean, I don't know your style. Like, you just want to buy what is moving. That's a different way of looking at price, but I don't do that. I want to look at few things before I'll throw money on the board. If I'm trading $2,000 on my wife's account, I have $3,000-4,000 in my own account as well. So I have like $6,000-7,000 give or take on each trade. I'm not gonna just throw 7-8 trades. The guy was telling me yesterday, I was like, what makes you think that you're gonna run 10 trades? You want me to throw what, $60,000-70,000 in options on a 7-8 trades? How are we gonna manage that? You know, if you're trading one contract, two contract, yeah. Oh, you can stay busy, open 10, 15 trades. You cannot run that many option trades. They're all different, you know? It's very difficult to run 7, 8 positions on options all at once because you could be right on 4 and then 2 of them are eating that profit. I mean, you're just like, what the heck? Like 4 are paying, 2 are just going a little bit down. If you wouldn't have those 2, you would have made money on those 4 that is going in your favor. It's very difficult because every trade is different. One trade can hit with some news overnight or something happens, and there you go. And now your the rest of the positions are doing okay, and that one just killing you. Over trading and too many trades, not the way to. You have to be selective. I just shared with you. Look, let me show you this. Here's a screen 3. Here, look at this watch list. From here, and I cleaned them up as well. Believe it or not, I don't look at this watch list. It doesn't mean I have to trade all of them at once. MSTR, the team, AD, see the Qualcomm. Like some of them I don't even have wave counts and stuff because remember what happened with my old one, AMD, Nvidia, Netflix. Like I focus more on top ones. MDB right there. This one had a nice pop as well. Let's take a yesterday. Looks good. The problem with the MDB looks good. I would buy this the pullback on this one. This one is a very fast move happened this week. It looks good. Wave count looks good. It kind of felt like the third was shorter, but no, it's more than 100. That was that earning pop. The third wave had right there. So you can do. Yeah, MDB is good. I like this one. This one just it's a pretty quick move. So we can look for this second wave to kind of come back down to this 245, 278 area right there. And then we'll see if we can take out this 300. I mean, I don't know if we can just take it on Monday as well, the way this thing is going. And we can just look for 315, 335, 352 area. I don't know where this first will end, but I'll watch. That looks kind of stupid. RSI is down, price is up. These indicators makes me laugh sometimes. Oh man, this one that's got a big pop as well. He booked profits on this one. That was I wish I mean, I didn't. I closed the trade. I didn't took advantage of the entire move up, like I know is gonna happen. Doggy, this one looks interesting. Datadog. I've been showing you this count. It's a simple zigzag wave count. Such a look like having wave 1, 2, up and 3, monster fourth wave, but it's okay. Just kind of stayed kind of sideways. That's the wave 3 up to 200%. Got a W, X, Y. Yeah, it's okay. I mean, it just chewed a lot of time, but it looks okay. It's fine. Then you got another 5 up. You have a 5 completed A. Here you have this B, A, B, and you have a diagonal C. There you formed another 3, sorry, 5, 1, 2, 3, 4, 5 into a 1, 3 to down to 2. So you took out this high right there, 118, all the way up here. And then from here, from February of this year, okay, this thing is gonna go nuts. I think I should buy this breakout and just stay long. Look what this stock has been doing since February, right? The banner on the bottom until here. Nothing, just sideways. This thing is gonna crack hard to the upside. The reason why is that because it's been consolidated for a very long time. So the plan, I mean, it's an uptrend on like the channel is to the upside. It has a round bottom. This sideways chop since February is all sideways. Okay. The 61.8 was 1 month right there. 61 point was July 28th on this weekly bar. Then the bottom was the next week. And then from here, it's starting to recover. But the point here is that this cup and handle, okay, your measured move is typically 100%, right? So that's beside the point for now. But if you just simply take a measured move of 100%, just distance travel in 1, projected from B, and then down to a C, is 444. That's a lot of upside in the coming years on this stock. I think for if you're planning to hold this doggy, I think it's worth holding it. You have a lot of you have one you only at 129. You didn't even get a breakout yet. Okay. You just have to stick to a plan. All you do is just like forget about all this 1 2 1 2 all this. You just split 2 measured move. You take the biggest move that you had, project it from your largest percentage decline, and you just project it to the upside. You talk in 129 to here, that's a 241% upside in the next coming years. This is a weekly chart, so don't think about it for a second. It's a 2 measured move. This stock right there works really good with fibs. I can tell you when I start making a wave count is when a certain fib lands and the price comes, hit that spot, and then turns. Those are a very good stocks, and there are not that many out there. I mean, Nvidia is one of them, really good. Tesla is another one, really good one that responds really good with fibs. This is another one. ServiceNow is a really good one. Adobe is a really good one. Like these are the stocks of very steady stock. Apple, excellent. Microsoft, like all FANG, like Mag 7 stocks, because they're very liquid stocks. So the price just, if you have a right wave count, and the price is going to respond as soon as going to hit that fib, you know? So there's a lot of stocks, not a lot, I would say. MDB, MongoDB is another one. Works really good. ServiceNow, Adobe, like, there's like Adobe that I just showed you before. It's just like it. You see, like I mean, you're looking at a bigger time frame. Like, see, 286.40, right at that fib. Boom, it pops. So from 486, if you just that's the low right there. It's what, 15, 16 points? 15, 16 points from here to here. Under delta is like what, 14, 15 bucks. But the point is, like, what kind of a response do you get when you have a price that comes down, hit the spot, and then shows turnaround? It doesn't mean, I mean, it's still got a lot of work to do. But the point is, like, these charts, like some of these stocks, they work really, really good. I do a lot of LE. I don't do as much as I used to, but this looks really good on a longer time frame. So I can
Mo, I think the team, you close the position on team, but the team chart also looks very similar to Datadog.
yeah,
I think that software space is now breaking out.
looks like it. Here's team right there. So the team that I have, it's the same. Well, I gotta go to a weekly time frame, but these trades it's gonna stay for like forever. Like, they're a very long time frame. Okay. So the team has the same thing here. You have, look at this way, okay? It's kind of hard to do it here. Let me switch screen for a second. I'm gonna go back to the one on the top. Share. Second. Let me bring this one up here. Okay. This team right there, you have a clean 5-way move to the upside. So then it has this lot. So the largest percentage decline, okay, that you have is going to be your wave 2, right? You cannot make this as a 4 against this one. Look at the size of this one compared to this. So you have to look for the largest correction here. So these two look similar. So you got 1, you got 5 waves here, down in 2, up in 3. Here's your 4 as a running flat. And there's another 5th complete one. So you have 5 completed waves. So from here, it took the 3-wave correction to the downside. Looks like a 3-way move. So it's a clear 3-way move. And then from here, it's starting to show like this as 1, 2, 3, 4, 5. So I can make a case of a motive diagonal. What do you need is a 5-wave to the upside. We have that. So from here, remember, we always talk about diagonals. What do the diagonals do? They're trying to press right back toward the wave 2, where they originally forms. So you have this as your first target. Jeez, what's going on? So you have this as a first target, and then you're going to have your wave 2 is going to be your second target. So it completed here, came back to 4th, went pretty close to 2, but didn't get there. Now it's trying to reverse. So this pocket right there, when you have a leading diagonal between 4 and 2, is your buy zone. as long as this diagonal here will be wrong if it's going to take out this low. That's the Elliott rule, right? 5 waves up, your counter trend should stay above the low. So the low, otherwise it's going to invalidate the wave count. So this zone right there is always going to be your buy zone. So you have to wait when you have a price that comes down like this against your 5-way move, because this is your counter trend move. That's your wave 2. So from here now, I'm going to weekly. I'm going to go to a daily time frame. Now I'm going to go to this. I'm going to come down on time frame. So if we have 5, this is a 2. Now what do we need? We need to complete 5 smaller waves to this 1 first now. Okay, so what we're fighting right now. So we're gonna go back to another 5. 1, 2, 3, 4, 5. Another sideways into 2. And now from here we look at 1, 2, 3, 4, 5. Okay, to see how it goes. Now if now you have to complete this 3 first. Okay, somewhere around like this. Now you need 5-way move to complete. It's going to take, because the daily chart is going to take several weeks, several months. So once you have a completed 5-way moves, then you're going to have another setback in 3. That 2 right, this 2 right there after completing 5 has to stay above this low right there. And then from there, you look for that third of a third breakout. It's a good setup. It's a good setup, but it's going to take some time. Okay. The doggy that we have, that's looking promising. This one. Okay. So look at that wave 2, right? That's 61.8. There goes your 1. Here's your 2. And now it needs to take out this high of 138. And now the thing is this, the next week it's gonna face this trend line resistance. Okay, from this top to this where the price failed, and it's right there now. So it's gonna come to a test right there. So what I see now is like I gotta go back to a smaller time frame because we got a 1. So we take this as a 1, 2, move a stop right there, 118. Okay, 118. And see, because the breakouts happens in a third wave most of the time. It doesn't happen in an ABC or some corrective wave. You're trying to take out the high. See, this is a third wave. Third wave has is the most powerful wave in the entire trend wave. So the third is the one is gonna crack that line if it's gonna go. So this trade is 129 for now. 118.72 is the wave 1 high, that's the 2. But it has to move. It has to crack now because this 4th has to make some room to complete this 1. So pretty similar to team right now because they're all trying to complete this smaller 5 wave into a 1, and then it's going to come back in 2. Because you're going to complete this 5, you're going to come back in 2. Then you're going to have this third up. So it's going to take some time. But if they kind of settle around, or if they report good earnings, I mean, yeah, it's a good bet to make. They can just rip through it. But this is good. The doggy looks I always like this stock. Team Mongo and this Datadog. I always liked this one. Years ago, I had a pretty big trade on this stock. Ever since I've been loving it. That was the option earning trade I did was a very nice payout. Um, so this looks good. I mean, hey, if just focus on this. This. Look at this upside. I think a long-term hold on this doggy right there from this cup and handle is worth holding it with Globe and Zebra. I gotta study um, some more about Datadog, pull up their financials and stuff, and see what the company is saying and what they're doing. And the only thing oh boy, AMD is fine, and AMD is kind of losing some momentum here. Looks okay. Trying to hold this line. This 162. Gotta watch this 160, 62 area. I wanna. What I was gonna look for. Where did this bug? Yeah, there you go. This is the ETF that tracks all cybersecurity stocks. So you cannot trade any cybersecurity stock if you don't know what this ETF is. You see, it works exactly to these Datadog. These big names is gonna it's gonna follow this one. You see, it has the same. This is the. I don't know if you guys know about this. It's called bug. So all your cybersecurity stocks is in this ETF. Okay. So we can kind of see that it's breaking out, right? And it has, you see, same round pattern here, sideways move here. Let me do this. Where's my I'm gonna do this. So now how are we gonna do this upside? Take this low, take it to this high, to this 100% at 38. So from here, that's 18% upside on bug. Now, if this thing goes, it will move that doggy with it. So what we can do is put a doggy on top of it. See, now if you look at this, because Datadog was underperforming the ETF because it's been sideways since last February. We looked at it, remember? So the ETF definitely took off because it has several other names in them. So the relative strength of Datadog is weaker than Bug. So now if we take, let's say, the one, what's the other security you have? Palo Alto is another one. See, now the Palo Alto here is outperforming the entire ETF. That's how you see strength, which stock is doing better against the other one. So which one you should buy? If you buy the relative strength, you buy the strong leader. You don't buy a weak one, the one cannot even walk. You buy the strength. What other do we have?
Crowd.
Huh?
Crowd.
So the crowd is change the color because they all deep by default. Okay. See, crowd is neck to neck with this bug. You see? Now this one, the red one, is CrowdStrike. Let me do this. Here. So the Datadog was in black. Blue. Palo Alto is in red, and then CrowdStrike is in green. You see the green one, you see how it trails this ETF? Or exactly pretty much the same one, unless still here. This CrowdStrike was outperforming the entire hide these ones. Here. You see? It was out this. Now you have to look at this way. All of these cybersecurity stuff in this ETF, right? So now it was pretty good all the way down here. From here, start rising up. See, they all trails. I like this one, like the way when it trails, like with the price of and then from here it was starting to outperform. And then the bug here overall, because bug has everything in it. So this one is trying to outperform. Then it took this dive lower, CrowdStrike. I think that's the thing that came, all those, everything shut down. That's the dive it took, and then it kind of mashed up, and now it's moving with that thing, you see? So
So I think that Datadog and MongoDB, they're not in bag. They are they're not cybersecurity. So I think you need to compare Datadog with IGB, which is a iShare software ETF. IGB, sorry, IGB. B as in Victor, IGV.
everything is ripping.
Yeah, that's what I've been saying. The software, cloud software company stocks, they're ripping. They're ripping.
This one is, we make this thing as black, and then yeah, see, doggy is out, not doing good because it's been sideways since February. And we looked at it, stock isn't doing anything since last February. Now it's trying to see if it can break out this. And I hang on, let me check the daily is already here. Oh yeah, there you go. See, weekly looks good. Weekly has some room. Yeah. See, that's why Datadog is moving.
So was Steam, I think. But I think that the best performer among IGB is now, I think.
Oh, ServiceNow for some beast. That stock is a monster. Look at that.
Yeah, because they say that they have monetized, AI.
Oh yeah, they're with the partnership with the NVIDIA. Accenture with NVIDIA. Oh my God, I don't know. That's crazy. These companies are so everybody wants like signing up with NVIDIA, I mean, you gotta pay attention to it. And people are telling everyone it's a freaking Cisco. Idiots. Tesla, nasty rejection. Here's the thing about Tesla that well, is the worst stock for this year based on seasonality. And it looks like now, after that robotaxi event, it's just literally confirming the seasonality is literally playing it to the penny, you know. So we looked at them before when we start out this month, I was hoping that I was I put a butterfly based on being a neutral, but just got a pretty big slide yesterday after the event that nobody really care or really like about. I mean, how could you possibly stand? First of all, you're 35 minutes late playing a techno music. Then you show up in a car that just driving by yourself and just on a studio. There's no traffic around. There's no people walking in front of the car. Just drove in, standing there, and he's reading the slides in front of him. I mean, you cannot read the slides, like give proper information. First of all, the guy doesn't even know how to talk. I mean, no offense. Seriously, doesn't even know how to talk. He talks like a robot. His body language is so weird. Every time I listen to this guy, he started like thinking like you have to have eye to eye contact. Like your body language is just very, very different.
Yeah, because Elon has Asperger, so
His weird is just because
yeah,
look,
but
man to man, when you talk, like you're gonna have to have your eye contact, like like he talks like a robot.
he
But
does
you
because it's because of his Asperger syndrome or autism, spectrum he has.
it's just like if you standing up in front of there's 3 million plus people are waiting to hear what you have to say about all this, the future that you just like. I mean, I understand. Look, yeah, Optimus does all this that looks cool, whatever. But prepare your slides the right way. You have shareholders and you have people who are relying on, like, wanted to invest in a future, wants to look at it as a future. If you cannot do it, hire somebody who can walk you through in all the slides. put it up on a massive projection screen behind you. This is what it is. This is, oh, it's going to be 30,000. Oh, you can buy Optimus for 25, 30,000. I mean, who talks like this? You know, well, I projected I want to be optimistic. Yeah, it's going to be 2026. So by the time it's going to be 2028. It's just like guessing. Like no time projections. You're just guessing.
And
Very, very odd. I was kind of surprised. Like you stayed there for 17 minutes, people said. And he just like, oh, let's get the party started and this and this. And then those Optimus are serving drinks and this and that. It's like, I mean, give details. Like, hey, this is what I mean, you trying to like do power slides, like PowerPoint presentations, like hire someone, a guy who, there's so many professionals out there who can present you that thing. Look at Jensen when he did with this Blackwell, how beautiful he was showing everything behind him one by one,
because
carrying that thing in his
every
hand.
detail of his business is so super focused versus Elon totally distracted.
Yeah. The guy is like, this is the way to do it. I mean, you have shareholders who putting money into your stock with an idea like, okay, yes, but give them the information. This is the world. It's all about Twitter, about the information, this and this, and you coming up on a stage and they give no information. You know, give people timeline, and then you're not gonna even meet. Those are all estimates. Well, yeah, my estimate is for the next 3 years, I'm gonna make $50 million. Okay, good for you. But do you buy that thing? It's like you tell them something like, "Hey, my this for the next 3 years, 50 million." Oh yeah, okay. Well, so what happened to the next 3 years? Oh no, it's gonna be 4 years. Oh, by the 5 years, yeah, I'll get to 25 now. Like that's crazy. It's great. This guy, to me, I think he has done enough. Okay. I give him a credit for it that he has done, what he has achieved and what he has accomplished so far. I think dude is toast. He's cooked, you know? He's not he's focused on other things right now. He he wanted the control from Tesla. He got it. He got his $55 billion pay package. He's set for life. That's it. He has shareholder that can drive the price up and down, whatever. He's getting his paycheck. He sits on a Twitter day and night, 24/7, supports Trump. And now he's looking to see if he's going to get elected, and I'm the one who's going to be balancing the budget and stuff for this country. That's what his focus is on. That's what he's doing every
Crazy.
single day.
Crazy. I think Tesla need a CEO like Tim Cook, who can really manage the
Correct.
business.
I
And
mean, guy
Elon
did this. He's
behind
not
focus on technology.
exactly. Give them the information people want. Address it like, hey, it's just like it's just that the guy focus is not there. He bought a 45. I'm not saying like, like he's an idiot or whatever. I mean, he's a smart guy. I mean, but he's just not focused. That's all it is. His focus is all more on politics now. I mean, how many leaders, how many of these CEO that you have seen that they go out worldwide and meeting all with these leaders? Who does that? Compared to him, one day he's with Turkish prime minister, then he's sitting having dinner with the Italian prime minister. She's like all like media is like throwing a fit like like all over her. Like then he's sitting with the Brazil like dude is like going everywhere like he's a president of the country. You know it's very weird, kind of a security clearance that he has. I don't know what kind of a, like, he knows about the governments, like, because he does the Starlink, and I don't know. I mean, I'm not gonna guess, but there's something that he knows that this guy just has way too much country, like the security clearance. Takes a plane and he can fly to any country, anywhere, and just sitting with the president or prime minister. Our president doesn't even go there many times. One day in Dubai, and he's sitting over there, and then Saudi Arabia, and that's crazy. You really think the guy lifestyle is this very, very different. Anyways, Google is good. Open for this thing to play out. That'd be nice. Looks pretty nice. Double beautiful neckline here. There's your, see what the year. Yeah, the year high is here. Decline, up, low, up to neckline. This, it just needs to form this right shoulder. And then these are the upside projections that I run. It has a gap here as well. Don't forget that. I think is an earning gap, I believe. This gap needs to get filled as well. This one. So we could run a move to 181 just to fill that gap. So just have this for now. And I can, if it moves, it needs to break this neckline first. And if we'll get there, fine. If it's not, then we'll see. Then if we 177, that 176 to 188, 181, unless it takes one more leg down, it can, it definitely can. But you need a little bit of a volume here. You can't have a lame kind of small looking shoulder. Shoulder needs volume. And the volumes mostly has to be equal on both sides. Yeah. You see this kind of spike and that drop right there? You need kind of similar looking volume here. This is good. But again, this is the daily chart, nothing. But something, when you look for a head and shoulder couple patterns, you pay attention to this side of volume. You kind of need the same kind of here. Those are really nice inverse head and shoulder and a cup and handle patterns. To watch, you have to watch volume on both shoulders. And then from there, if it plays out, yes. This is working really good, working really good. Because what I did here is this 300 price, right? So this was the 300 price, took this low. When you run this high to this low, your fibs 78.6. Remember, we talked about 78.6 all the time. Either do a break, either you break or either you're gonna crack lower. Failed, took out this low. Then from here, made another. Now I took this swing from this high to this low, 78.6, failed again. Took out this low again. This is the same thing I did here. I took this move to this low. Like, okay, here comes the decision point. 78.6, trying to press really, really hard. There goes your trend line. Here's your first drop. Here's another drop. There you go. Almost right to that line. It start failing. And now it's down here. This stock, whatever happens here now, okay, needs to break 270. Until then, there's no upside on this stock until the end of the year. That's I can tell you that. It could take find support anywhere here and then make a turnaround, or this thing's gonna go right back to that 182 again. It's just like this one. Then from there, it makes its way back up again. The stock is clearly making lower lows and lower highs. It needs to make a higher high. The higher high will come into a play when it breaks 270. That's just the rock bottom tag, the price right there. It's going to break this trend line and it has to take out this high. Now the question is, can it comes to 200? Can it comes to 186? Can it come? Yeah, it can come down here. I don't care. What it is, what it is. Just leave the way it is. Not gonna sit and fight this stock. How low it's gonna go and what it's gonna do, and you never know. It's gonna rip just right back up on Monday. This stock is a very sneaky stock. Okay. It caught everybody here to the upside on a breakout with a taxi event. It flushed everything down here. Now people are gonna start pressing towards shorts. It's gonna squeeze it right back up. It always does that. You have to it's just the way test the stock trades. People like not happy about the event and this and that. And I put the gap right there. Okay, at the open yesterday, it can just whatever it's gonna do, it can move right back up. So I don't know. Stock is just too sideways. Very difficult to. I can't even. This is a three-way move. It's so difficult to put a fourth here, four-way. Like I can do 1, 2, 3. Where do I put 4 and 5? These are all three-way moves. If you want me to show you on a wave count, I can do that, and then we're done for the day. Let's see. This was the last chart I wanted to talk about. Here. No. This one. Let's go back to a bigger time frame. Here. You can just see what the mess is all about. Here's Tesla when it's $1. Here's your 5 completed wave, move to the upside. 1, 2, 3, 4, and 5. Here's your wave 2. Here's your wave 3. This wave 3 right there from $1 is bigger than 100%. This wave 4 is going to be a wave 4. Okay. The wave 4, the bottom will form. One is going to have 8 swings to from there. We don't have it. Okay. This wave 2 was 101 bars, 136 days long. This is definitely going to be more because it's going into this triangle now. So as of yesterday is 153 weeks now. 153 bars. So 153 against 101. So this is definitely taking time compared to the wave 2. It's okay. So now we're going to go back here to this triangle that we're tracking. It is definitely looking at a triangle. This is a contracting triangle. You have, that's your high right there, 414, down to 101. That's a three-way move. Here's another three-way up in B. The triangle B, the C wave, and the D wave, and the E wave, okay, is going to come really close to 161.8. Okay, so you have a three-way move here. Sorry, ABC here. So they're basically what it is. They're a bunch of zigzags. But the triangle takes a lot of time to complete. Okay, so you have the zigzag, right? 5 up, 3 down, 5 up. So the zigzags are. This one is the same thing. A, B, huge diagonal with an overthrow. Barely made it above 100%. Should stay above 100. Otherwise, the 5 is going to be longer than 3. So this is good. So you have a diagonal, so you have an A, B, C here. So now you connect this low, 101. That's when he bought Twitter. Then to this April low of 138. From 138, where was in April, got to move back up to July. Came back down here in August and came back down, come back up. So now we have is, you see A, B, C. Well, I know the low was 138 compared to 125. Look at the D wave, right at that 270, 261.8. So this E wave now, okay, is going to be right around here to this 180 mark now. It has room to run. It's gonna crack. I wouldn't be surprised this sucker is gonna, unless it turns around. I can be wrong, but this has, well, if this is an ABC, the C wave has to be a 5 wave. It has to complete. There's no other wave. It cannot be a 3-way move. They're all bunch of 3 here, 3 here, 3 here. You see, they're all bunch of 3s. So now we're gonna go back to 2 hour. Same thing. I'm just gonna come down in a smaller time frame. So the D wave, remember we need 3 subdivision in each one. So you have a D wave right there, which is at 161.8. C was at 161.8. Now we have to look for this E wave around to this 661.8. That comes right here. So how do we do that? So here's an A. That's going to be it's going to be a diagonal. There's an overlap there. So here is your diagonal, an A. There's your B up to this trend line resistance. And now we have to complete 5 waves to complete C, this E triangle. And this E must stay above the C wave low. That's the rule of Elliott wave. The E wave cannot retrace below C. It's going to change the entire look of the triangle, and triangle is not going to be no longer valid. So from here now, I'm going to go down here to a 1 hour time frame. There is a massive support here for the downside that's going to come into a play. How fast? Well, I don't know that. But I'm going to give you these levels here. If you are willing to buy the weakness, don't ask me 10,000 times. Should I buy here? Should I do that? Mark these 3 prints. 209.64, 194.62, and 175.51. These are the 3 marks. If you buy here, you average here, if price gets there. Well, otherwise, you just stay in a trade. Don't do anything to it. Do not increase the risk if you're not willing to hold into anything. And then from here down to this. This zone right there, Tesla works really good with fibs. I can tell you that. It's going to be the zone to, this is where the completion of the E wave is going to be. And this measured move of an A, B, and C is right here as well. 177. So there is some serious support sitting here in this zone. Only if the price is going to get down there. Okay. Can do this. See how this 100% are stacking up one after another. We'll buy something, don't worry. Yeah, because the C wave, all of these C waves cannot be a three-way move. It has to come down in a 5. Look how the stack is. You see 4 versus 3 sitting there. Now focus on the green ones. Those are your typical targets. Those are your typical buy zones, fib prints. So what happened now? Okay, draw a line from this low down. Put a price tag here, 182. 182, that was August low. So that clearly broke, right? So for the B wave, you need to complete 5 smaller waves. Because for 5 smaller waves, you need 5 here in a diagonal. Here's your flat. Okay, A, B, C. The B wave was right there at 127. Here's your C and your 2, and here comes your 3. So now the 3 which is coming down right now, it's gonna have a couple bounces. Don't get me, it's not gonna just come straight line like this. So yesterday it went to 214.38, right into that 161. This is a typical third wave downside target. Okay. So right now this third wave needs to find right here between 161.8, which is 216, 200% is 208. If price really pushes down, I mean, like 197. This is how far the third can go. But for now, we'll watch this one for Monday and Tuesday and see how that thing, how this thing trades. But from there, gonna track this fourth wave. If I do a fourth now, it shows me these 3 prints to the upside: 222, 227, 231. And then it has to settle back in a fifth wave to complete 1. Once it completes 5 waves to the upside, then we'll get the bounce here back in 2. After 5, you get 2. Then you got another 3, 4, and 5 is to complete this. Okay. If price somehow manages to reverse, it can, anything is possible. So you always have to look at both ways. So if this price starting to reverse, curve out, and just if it takes out this 271 mark, that's when you're gonna have upside on Tesla. And that upside on Tesla has to line up with fundamentals as well. And they have earnings coming up. Nobody knows what the earnings gonna be, and how he's gonna talk. Nobody even knows that either. There's something that this guy is actually probably doing just to probably piss off the people who are. There's something, you know. It's hard to judge, but remember he was picking up on Bill Gates because he shorted that stock and he was making fun of his belly and on a Twitter. Yeah, he there's things that he knows for sure. So it look like a 5.
Yeah, it's gonna be on October 23rd after hours.
Oh, the October 23rd.
Mm-hmm.
Yeah. So I mean, just stock is just, it needs to break 270. That's all. It's just, I mean, hey, I'm gonna hold my breath. We'll try to trade, but for now, and it's just the event that just happened, but it looks starting to look like a 5-way move. You're gonna have a 5-way move here. Yeah, you have definitely. This thing is coming your way. 5 is gonna give you a 3 counter trend. And then from there, you have a third wave, fourth, and fifth. I mean, I'm not gonna, I personally own shares that been taking punishment back and forth for the last 3 years. I mean, they're up. You know, there was up double the amount and then gave everything back, and now it went back. You know, I'm one for 150, 350 shares. I mean, you can come close to here. But if price comes to this zone right there, I know triangle. I know triangle works. This is where I'm gonna load up some leaps on Tesla. But I need this first to confirm. You know, it could get a little bit more of a, depends on how this, because C wave sometimes can be nasty. It can push a little bit more down here. It's possible. But I want to just start buying at this 175. Because this one right there, triangle, is you can get a post triangle thrust to the upside. It's gonna be huge. I can tell you that. So I don't know what he has to promise and what he has to do, but this is waiting. This is definitely a triangle. I'm 98% positive this is a triangle. This is one final leg to go to complete the E wave. You know, it looks so, it's a perfect looking triangle. And B wave is your always confirmation for a triangle breakout, which is this 270. This is where the swing is gonna has to make a higher high. And then from there, it resume back to the upside. I don't know what's going on here with the gap. Yeah, because everything is all over the place. Yes. 1 hour is fine. Plenty of time data that you can collect. So we'll track this one for now from here. See how it goes. Tesla promises, and yeah, larger degree fourth waves are very painful. Very, very painful. Look, I just looked at it. Datadog. Look what the stock has been doing. Imagine sitting on this. Since, you know, that's this side, like, I mean, depends on a time frame, but if you bought leaps, they're toast. Even though if you bought leaps in a first quarter, okay, on of a price action, but nobody can predict these anyways. I'm just trying to make a point, is like, if you bought leaps in a first quarter on a stock like this and it just goes sideways, this is toast. You know, all the time decay and all the time that you wanted to have on your trade because it will give me enough time to get the upside. Yeah, you got nothing. Yeah, sideways price action is brutal, especially when it comes to option. Shareholder, yeah, no big deal. You got all the time in the world. So gotta be careful with how to play a certain move. AMD is fine, still gotta settle in a second swing. And this thing is a bit of weakening. I mean, it's above the trend line. Woke above, came down, it's trying to dance around this 162 area. This one right there, very, very interesting. I mean, I don't know if I have ever come across such a chart that it has worked so well with the time and price. Like, have a round bottom here, 10 days, price took off. And if you do that from here to here, that was 9% upside. There goes another, because this was the 4% some change correction that we had, remember? We just looked at them before. So anyway, so this is a round bottom here. There's a 9% upside from here. Now this one is a little bit bigger because you see the depth of this one is slightly bigger than this one. Took exactly the same 10 days right there, and it took off. Now, is right there is 58.21 now, which is the 78.6. It's the key fib. Now, if we take this move from this low to this high, lasted 30 days. This move from this low right there, September low, is going to be good till October 18, which is next Friday. That will complete 30 days side by side along with it, because it has showed a response after this 10 days move, right? On both sides, so working pretty close. So it's 9% move here, 7.7% move here. So it has this little go signal as well. This was a failed one. And then now if we take this low to this high, we can just do the 10, doesn't matter, it's a few points, and this low. You see, the price went to 78.6. It did manage to break, went to 100 near the 127 extension. That's when it failed. So in this case right there, if we run the same scenario, take this low to this high to this low, we're right at 78.6. So the equal distance of this cup of 100 is 59.34. This is probably printed to the penny yesterday. This 58.21 print. It is funny that the RSI is not even overbought. Look at that, sitting at 71. Like this one here, RSI was at 80. Unless it is starting to show some bearish divergence, that's different if that's the case. Something like this. This is when the relative strength don't make, higher highs with the price. Very interesting market. I'm telling you, something is just some things are just not making any sense right now at the moment because the price is accelerating too fast, too quick. Especially this NASDAQ is okay. The S&P is just going a little crazy, to be honest. So we're right there. So we know exactly what our wave count looks. That 5821 to this, along with this. So we did. I'm just gonna focus on this one for next month. So plenty of time. The data, anyways, 5 days goes so fast, 6.5 hours. So I'm gonna track this. See if we can like to stay bullish. Like to see if um if earnings comes up strong, and if election melt up continues, yeah. But then election where VIX is sitting at 20 right now, that is it's gonna stay at 20 most likely until the election night, the election day. This is just waiting. It is waiting for that volatility. That volatility is coming. It's very hard for me to overcome. One is this, that it's a 4 straight quarters of upside. SPY Q1 10%, Q2 4%, Q3 6%, now 1.93%, just 4 straight up. No other stock was down last quarter. Transport was down 1 quarter. IWM was down 1 quarter. Diamond was down 1 quarter. S&P straight up 4 quarters in a row. Is this is something is not right. I watch a lot of data. Keep that thing in mind. Okay, it's just, I don't know. BlackRock is just Goldman Sachs or whatever. There's something is not right about S&P right now. 4 straight quarters. I mean, it's not over yet. Still got a long way to go to complete the Q4. But 4 straight quarters will be something. This is extreme. Look at consumer XLY 2.84. Yeah, thanks to Tesla now. It's going to drag this XLY down. Healthcare down 1. See, even these ETFs, every single one of them had a 1 down quarter. What the hell is this? I don't understand. I just don't understand. Material was down Q2. Energy was down in Q2. Now they're up, which is fine. Financials, I mean, everything is up. That's a clear bull market. Every sector is up. 11, all 11 of them. But it's just very hard to overcome 4 quarter melt up, to be honest. I know everybody wants to pick a top. Sometime I do have an itch as well. But at the same time, I just don't want to burn cash. Just assume this is the top and I'm going to buy poor and we're just going to have a massive slide down. I mean, come on. Look at this thing. There's a line chart right there. Look at this move. Forget about this VIX for now. So if this price can come back down 5, 6, 10%, 15%, let's say, you think it's going to do anything damage to the chart? Absolutely not. You need like weeks and weeks of selling to put a damage on this kind of a chart. That's just going crazy. I thought about making some sort of a diagonal, but you cannot do that, you know. I know a lot of people out there that trying to connect these ones. Yeah, keep moving this line up and up every single day. Where you want to land them here? You know, I love how some guys have no experience, but they will tell the world that I know how to do technicals. You clearly don't. You're just drawing lines. How many lines you want to draw? So you want to connect this, then you want to connect this high. So every day you're connecting these highs and just keep the prices keep going up and up and up. It's just not how it works. It's a very subjective trend lines. But everybody sits and assume thinking like, oh my God, you break this trend line, the world is coming to an end and the price here. Everybody has this line. I bet you right now. Every single person right now is keeping this trend line from this low. Oh, this thing breaks the entire trend change. What about this low? Where you have 10% correction. Yeah, I gotta go as well. You know, where do you want to draw your trend line? From here? Or then you want to connect this low? I mean, where do you want to land them? Because an overlay is going to be a little bit different to drawing on the overlay chart. They're very subjective. So you can use this low to this low to see like, oh, where the top will come. Mm-mm. Use the same thing. I gotta go, man. I'm just getting tired. Qs, I have the same case right there, making a 1-2, 1-2 case. And this one either, unless this is a 1-2. So I'd rather just go the same way, same route. Move this one like this. No, yeah. Like this, it just matches the same one. There you go. So we just make a same diagonal here, like the one we did on SPX. Then we do this 1, 2, 3, 4, 5. So now we have this 4 to 5, this 5-way move, and now we have the second wave. So the same second wave that we have is the same one we have here. It's a different there. You know, so it doesn't, I mean, the point is like for next week plan is to focus on a price from this low, from to this, whatever the high is going to be, because you have 5 waves here. So any move that would come down, you just draw your fibs from this low right there. That will be your retracement, and those are going to be your downside targets. That's it for the 1 week. This. So you have 1, 2 here. So it's the same thing. 5. I think I don't know what did I do here on this. So this one lands here. Did I count it right? Oh no, I gotta change this thing to 1, 2. So I was thinking, I was like, something is not right. This one goes here. Like this. Now they match side by side. Go 1 here. Jeez, man, this thing is crazy. This, no. Where's your triangle? Here's your three-way move. Gee, I have to change these colors now because they all go through the black background that I used to have. You see how long it takes to make a this wave count? It takes time to count. And you don't know how to count, it's going to cost you money. That's what it is. That's how it is. Then this is a little bit, and that's the only thing I can do. Make a throw over. So it's gonna, yeah. So there goes your B. Now this is your 1 to go that far. So it's going to be the same 1, 2 that will match that S&P side by side. Okay. So we're going to change this one like this. So we can count 5 here. Make this thing as this, whatever the diagonal you want to make. Yeah. We need to do this one, see better. So now you have this 2 right there against this 2. In fact, you do this. Yeah. That's your plan for next week. That was your resistance right there. The 178.6 is sitting here. All-time high is here. 100% is up here. So we'll worry about more if it's going to accelerate, but for now it's well, it has an inside day. Yeah, use yesterday. So that's it. So now this 2 right there of a 1, 2 is exactly the same is here. 1, 2, 1, 2. You see? Blue 1, 2, green 1, 2. And it's the same here. Blue and green. That's it. So they go side by side. Okay. They have to match is gonna help us. You know, if you have 2 different wave count, you're not going anywhere. Thank you. Okay, I gotta go. I'm tired. Thank you, thank you, thank you. I gotta stop this. I gotta move. Oh my god. I gotta glue to this chair. All right, goodbye, everyone. Thank you, Dave. Thank you. Sweet. Oh, Serena one Dow. It's the same one. Same one. Oh, it's fine. What is it? The same Kami and the conflicts the same here. I'm still counting. There's your bear market low from 2022. That's your 1, 2, 1, 2, 3, 4, 5 up in 3. That's your 4. And they're looking for the fifth wave to the upside. So this fifth wave that you have from here. So you have 1, 2. So your upside is 433 on this one, which is a 100% measured move. And then fifth goes way far. As I just within this is a lot of, just focus on this one for now, like this. Oops. Like this. So just pay attention to this. Here. So you have 1, 2. Now you look for at least 100. It has to get to at least 100. And you don't want to have a shorter move. Oh, I stopped that thing.
No, we can't see anything.
Huh?
We can't see the screen.
Okay. Oh. Now you can see it. Okay. So same, I just went over bear market low, 1, 2, 3, 4. So within that 3, you have 1, 2, 3, 4, 5 to complete 3 wave, and you have down in 2. And then from here, from this correction, now you keep making higher highs. So you have 1, 2, and you look for at least 100% relationship of this. It comes out to 433. So for 433, you have a stack of fibs there sitting as well. Yeah, 161.6 as well, and 161 point here as well. So those are big projection to the upside. But for now, you can just focus on this. Dow is ripping. The only scary part, what Dow, I'm gonna be Dow put a, come on, put an outside bar, weekly bar this week. You see, this week was outside weekly bar on this one and this one, IWM. They both did outside bars. SPY and QQQ, they put a higher bar. But look how far ahead S&P is going compared to the other three, you know? I don't know, something is, gotta watch this thing closely, to be honest. We'll see how earnings comes and we'll go from there. Okay, I gotta go. Thank you, everyone. We'll see you next week.